650, we was gonna see 563. Boom, there it is. So we did hit it. Coming right back out.
All right, I'm back. Good morning. Starting the morning off real good. Big red candle to start the day. Bounce out that 562.85. I'm not gonna be doing that much talking this morning though. Let's see. See what I want to get to. SPY option. It was still dumping. Option. Market just opened. See if everything good. Yep. Get my lines together on the big screen. Boom. Right there. Okay, cool. Put another one. Drawing. Horizontal line. Right there. Change that color to red. Let me ready to rock and roll. Right. Okay. Right at support. I got support so far and right around 562.80. And we're breaking that support line. I got my resistance at 564. Resistance 564. Let me move. I think we got Jerome Powell speaking today. FOMC meeting. So we're waiting on that. Contracts are kind of expensive this morning. Yesterday they were like $1. They kind of expensive this morning. Yesterday was like $1 a piece. Where they bounce off 562.80 so far. But I see that tail forming. So that's an indicator that it's gonna go down. And that StreamYard's working pretty good for me. Think I might go on and get my subscription with StreamYard. I like it. Seems like I like it. I'm gonna try it out for the next couple of days. By Monday morning, I should be ready to go with StreamYard. That's why I'm going small on these contracts. These contracts are going real small. Small account. But the contracts are kind of expensive to what we really was looking for. Might have to go a little bit more today. Well, I was liking those $1 contracts, those 80-cent contracts, but those contracts are way down the ladder of the contract ladder. And though you don't want to buy no contracts way down there, you want to keep it close to the money, the price of the stock. But I could get dollar contracts, but they're gonna be way out of the money. I don't want to be too that far out of the money. And you wonder why I keep looking. I got my other screens over here. I got this one on the 15-minute. I got this one on the 30-minute. And this is just for the stream. You know, this was just for the basics of the stream. This is on 3 minutes. My 3-minute time frame. And I can switch time frames. 3 minute, 2 minute, 1 minute, 5 minute, 10 minute, so on and so on. But I'm gonna keep it on the 3 minute on this one for entertainment purposes. while I work my magic over here. But I'm streaming this because I can record and go back and watch the video over on my trades when I'm done for my education. See, let me look at the big screen. Put the big screen on 3 minutes for a second. Yeah. Move this down because it looks like that's resistance right there. Yeah, starting to build up resistance right there. Move this over here. Boom. See, in the beginning of the day when the market opened, we had a nice big red candle on that drop. And we're starting to build support right here. So I'm gonna keep that at right around 562.85. Okay. Let's see. Put another line at 565. This is major resistance, right around 565 even. That's where we had a lot of resistance at yesterday. So I'm gonna keep that up there. That's major resistance. That's major resistance up there. If we can get back up there, I will go for a put contract that it'll go back down because we have been bouncing, hitting that and going back down from yesterday. Boom. Right. Yeah, so I'm gonna keep that one. Yeah, right there. Resistance, boom, and back down. Broke resistance and broke it and came back down. Support, went back under. Okay, I'm gonna keep that at 565. If you said yesterday, that's what we kept talking about yesterday at 565. So I'm gonna leave that there. That's a major resistance right there. Because it kept going towards that 565, kept hitting it and going down. Boom, 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 boom. And then it hit that 565 and then it just cracked. So That's plan, I would say that's plan B. That's plan B. Cause it might not make it back up to 565. It might not make it back up there. So that would be plan A if we was up here, but since I'm down here, that's plan B. I'm still trying to figure out plan A. Also, everybody's waiting on the Fed to speak. Well, I think usually the Fed speak. I don't know what time he speak. I need to look that up. I need to see. Let's see. What time today, brother? So we're trying to see if they gonna announce Jerome Powell, if he gonna announce the first cut of those interest rates. So everybody's waiting on that. What time is the Fed rate decision? Okay, he be speaking at 1 o'clock Central. So I might be here a long time today, y'all, because I like to be around when Jerome Powell and the Feds are speaking. So I might be here a while. He speaks at 1. So I think I'm just gonna hold my hands until then. And those contracts are getting cheaper. So yeah, earlier there was like $3, $2.50. That's too much for this small account. My support line is in a decent spot. Let me see, put it right there. Okay. Yeah, I think it's gonna really just move like this until until it get close to 1 o'clock. Everybody's gonna be waiting on that Fed meeting when Jerome's Powell is speaking. Jerome Powell is speaking at 1 o'clock. If you don't know who Jerome Powell is, that's the guy who runs the Feds, the money. And we've been waiting on him all these years, like 4 years now, to finally cut interest rates, like lower the interest rates. And if you lower the interest rates, maybe the cost of food and gas will go down a little bit more. And if you want to get a loan, right, the interest rate won't be as high as what they are right now. So that's basically has something to do with inflation, right? It has something to do with the inflation. Because the goal was to get inflation back down to around 3%. And they're basically almost to that level right now. So now they're trying to make a decision. It might be today on if they're going to lower the interest rates to start the process of lowering them back down. It's not really that much movement. We had this movement from up here, selling to down here, but so far we still stuck in the middle. I'm gonna put another line right here. I'm gonna make it a little thinner because no, I'm gonna leave that right there. I'm gonna make this one a little thicker because that's like major resistance. Yeah. This is resistance right here. This is also a little bit stronger resistance, but this is strong resistance at that 565. This is support. Like I gotta get me a new chair. I've been using my chair as a bench, as an incline bench. When I work out to work my chest, I think that's kind of messing my chair up. I need to get me a real incline bench. Still bouncing off this support right here. Boom, floor. Boom, floor. 30 minutes in the market. I haven't, no trades for me yet. No trades. But I am loaded with 561 September 18 puts. If it breaks this support line, a clear break, I will press that buy button. That's what I'm looking at right now. For my first trade. So $562, $562.65. And my stop loss would be $592.90. $592.95 will be my stop loss, and $592.70. I think that's where I'm gonna pull the trigger if it goes below $572.70. But if it comes back up $572.90, that'll be my stop loss. Not in yet. I'm gonna see what the next candle gonna do. No go, no go. I have to kill that plan. Yeah, it's holding up good right there, man. Let me move this down. It's holding up good at that support right here. 562.70. It's holding up real good. Yeah, I'm gonna try to get one trade in doing this live. But then I'm gonna wait until Jerome Powell get ready to speak. When Jerome Powell get ready to speak, then I'm gonna come back. But I'm gonna try to give me one trade in doing this particular live right here. It's holding good support right there at that 562.70. So I think I'm going to change my contract. Yeah, it's gonna be kind of slow until Jerome Powell, until they make that decision on what they're gonna do about them interest rates today. Usually it's not no big moves because everybody's waiting and watching and waiting till 1 o'clock. Well, 1 o'clock Central, 2 o'clock Eastern, basically after lunch. Not really that much volume coming in. Volume is how many people are buying and selling. It's not that many. It's not that much volume coming in right now. So that's the thing about the resistance. That's how you predict where uh, the market is going. Resistance. I mean support, support, support. This is resistance. And these lines that give you a clear indication, not 100%, but it's a good indication on where the market is going. And right now it's holding up that 562 support. This is medium resistance right here. 563.35. These are 3-minute candles. It's not moving that much, because a lot of people are waiting for Jerome Powell to speak. Like this candle, this candle, 134,000 volume. This candle, 300,000 in volume. 198, 212. Now look at this candle, the first candle of the day. $1 million in a million. That's buyers and sellers. Might as well say that's 1 million. That one candle. That's heavy volume. Now that's heavy volume. That's not a lot of volume. 300. You can see this the volume right here. This the volume. And see, it's not really moving. It's basically right now just staying in the middle right here. Staying in the middle. So that's an indication. No, I'm not finna pull the trigger off up in here. I want to either pull it right here to go right here to catch the bounce up, or up under here when it breaks support to go down, or right here, that's resistance. That's the ceiling. That's another indication. When it hits this, majority of the time it's going to go down. But then if it breaks it and stays above this resistance, then it becomes support. Then this line turns into that line. So this will be support, and then the next resistance line will be up here. Once it gets up inside of this channel. And see the way it's going? Let me put another trend line. If you was here yesterday, you know what this is. Boom. Wait, let me go all the way down to here. Boom. Okay. We're gonna see if it's gonna break that 562.70. Oh. My plan is back into effect. Not plan B. Plan B is up here. This is the plan I was just talking about. I could say plan A. Plan A is back into effect. If it breaks support, this is support, the floor. With a stop loss of 562.80. But it's turning back up again. Dang. It is also forming a triangle. If you was here yesterday, you seen this triangle. Well, it's happening again, bro. That's just like yesterday. Just like yesterday. If you was here yesterday, you seen this. It's called a triangle. A bear flag. This is the flag right here. It's like a flag. Upside down flag. That's called a bear triangle. And usually it stays like this until it gets real tight. Either it's gonna make the move up, but majority of the time on the bear flag, it's a dump. So, but it also can dump early. But if it can stay up in here, I'm looking for, that's when you get the most movement. When this gets really tight and these candles get really tight inside of that triangle, way down up in here, this is where you get the major movements. That is when you get the 1,000% gainers. 500%, 1,000% movement. Matter of fact, that's what happened right here. If you can see, all right, just yesterday, y'all. If you wasn't here yesterday, this is the same triangle. Right here. We was waiting to stay inside the triangle. Once it got to the end of the triangle, look what happened. This is yesterday, perfect example. It got inside the triangle and it sat it there up, down, up, down, up, down, up, down, till we got to the tight end of the triangle and it dumped. 1,000% move. So, well, didn't work. Well, but see, it can still go back inside of this triangle and start it all over again. We're back inside the triangle. It can still work like this. Even though we got that dump, it's back inside the triangle again. We can still work it like this. For the big dump. Now, actually, that's plan B now. This is plan C, because obviously this probably off the table. This is plan B now. Get off. I got to figure out how to get that off. Back inside that triangle. The support is holding up pretty good right here. Even though it did pull down to 562.17, it came right back up inside of this triangle. Holding up pretty good. Yeah, it's starting to look like we headed down again. Yep. Is it gonna break down? What's the next candle gonna say? Is it gonna break down? Is it gonna break down? That's what it is. 15. Okay. Looking like we're gonna break down on the 15 minute. 15 minute looking like it's gonna break down. Can you break below this 562.15, as we're gonna call it? Can it break below that? We are at 562.60. Like 562.70 is turning into resistance. I might as well move this. Put this down here. Yeah. I'll go down a little lower. We got a minute left on this candle. These are 3-minute candles. We got 1 minute left. It looks like 562.70 is turning into support. I mean resistance. Thirty seconds left in this candle before we get another one. Five seconds. 6, 5, 4, 3, 2, 1. Another candle. Look like it's gonna hold up though, y'all. Let me do this. Okay, now it's back inside the original triangle. That's okay. Even though it went out of this triangle, right? It didn't break all the way down. So it's back inside this triangle now. So it's still good for this movement down here. It's still good. Now, will it break out of the triangle on the upside to head back up to this 564? Back inside the triangle. Put this back on in 15 minutes. Cause I moved that too. Out of the triangle now. I pulled the trigger on the top of that triangle. Small, one contract, y'all. One contract. Can it break that support line right there? This green, boom, broke it again. Can it go lower? Can it break it all the way? There it go. There it go. Can it go a little lower? Okay, now my stop loss, well, my gain, because I'm green. If it hit that, come back up to that green line, I'm out. Let's see. Will it break down lower? I'm green no matter what. I'm out. Just like that, my first trade. See, I'm still looking because I'm a trade. I got another trade coming. If it go back inside up in here, I'm still looking for this right here. But it hit up to the top, right? That still becomes resistance inside of the triangle. And I pulled the trigger. This is still resistance inside of the triangle. And already seeing bounce. This is support. Bounce. Resistance. Bounce. Support. Bounce. Resistance. Bounce. Support. Filled up under support. Came back in. Inside of support. Went back up to resistance inside of the triangle. I pulled the trigger right here. Caught this candle. Boom. Moved my stop loss from right here to right here. You know what I'm saying? Once it hit back up here, I automatically got out at my stop loss right there. But that's, I mean, my stop, not a stop loss, but a stop gain. This is my stop loss up here. I pulled the trigger right here. I rolled the candle down, and once it got up under support, I moved my stop loss to now it's a stop gain. And once I moved it here, now I'm in the green no matter what. Okay, like I said, if you heard me, if it goes back up to that line, I'm out. And when it went back up to that line, I'm out. But I was hoping that this red line, I was hoping that this drops below this 562.17. It still might do it, but my stop gain hit. So I'm out. And if it goes back up to here, I'm gonna pull the same trade all over again. But it was a 20% gain on this. There was a 20% gain. But once I get more comfortable with StreamYard, I'm gonna put my box gonna be right up in here, so people can see my buttons in and out. But I'm not comfortable with StreamYard to be able to put my profit and loss box right here. So I'm using my P&L, my profit and loss box is off StreamYard. Otherwise, you'll be able to see it right here. You'll be able to see it right here. That's why it's not on the screen, because I don't feel comfortable with putting it on StreamYard. But once I get more comfortable with StreamYard, you know, I'm gonna have to put it on here eventually so I can see my execution on StreamYard. So once I do that, then you'll be able to see my profit and losses, because all I gotta do is just move it from where it's at now. So it's over here on this screen. I either use it on my screen or I use it on my phone. So I'm testing right now. But if you're paying attention, you see I'm calling them. And it still might break below this 562.17 support down here. Now this green line becomes resistance. And this is support. And then you can see we headed down, bro, just like yesterday. We headed down. Look, with this line right here, it's letting you know what, man, we headed down just like yesterday. Yesterday, the same thing happened. See, I still got the line in from yesterday. The same thing happened yesterday on the lower level. Now it's happening all again. You got to see all my lines, support, resistance, all that. Now you see it happening all over again. What happened yesterday is happening today, but a lot lower than what it was yesterday. The market is going down, y'all. The market is really going down. Let me open it up. It's going down. Now just think, somebody caught this right here on a contract, hold it, need to get a contract for about a week or a 2-week contract or a month contract, and caught this right here and still rolling, holding it and riding it all the way down right now. This move from here to here, that's a 2 or 3,000% gain, bro. This move right here, from there to there, and it's still heading down. That move right there is $1,000 to $20,000 move right here with a contract. This move right here, from here all the way to here, that's $1,000 to a $20,000 move. This is high of the day. Okay, you got your lines in there. You did your research. You see what's going on. Okay, I'm gonna pull a put contract that the market gonna go down right here. Have a stop loss of right here. That way, your loss to gain ratio, your loss ratio is real low. You got a 10% loss for a 3,000 to 4,000% gain. Straight up, this move right here, perfect trade, and ride it all the way down. That's $1,000. Right now, you'd be sitting at about 20 grand. Straight up. 500, you'll be sitting at 10 grand, roughly. And you know, some of these contracts are cheap. They're kind of expensive today. You know what I'm saying? Like 200 for one contract. That's, you know, they're kind of expensive, but you can go down the ladder because they're all different prices. But the further you go down the ladder, that's another explanation all into itself. You got to understand how the contracts work. You got to get. That's why education is very important. You got to go to school to learn how to do this, and not a university because they don't want you to know this. This is what they never wanted us to know. Financial advisor ain't gonna break it down to you like that, bro. And if you've been watching the last few days, you see that I'm saying everything that's happening, and with a tight stop loss. So risk 10% or 5% to make 20 and 30%. All I gotta take is a 5% or a 10% loss. That's it. Loss to gain ratios. I hit my stop loss, regroup, pull another trade. We back inside the triangle. See, we back up here that this is a resistance too. I need to move this down. See, and the resistance and the support always move. I got my contracts still loaded. Same contract. And I could take the line. Let's see. Boom. And go right here. Take it from here to there. Now it then broke the resistance. Let's see. I'm gonna get rid of this. Boom. Now this is not resistance anymore. Now it's support. Now that is support. Now this is resistance. This is support. It changes. I'm gonna get that out of the way. And then if this goes a little bit higher, I'm gonna move this out of the way. Matter of fact, I'm gonna move that now. Now we're simply to go here and break that 563, no, the 564. Even though even though the line says 563.98, it's really 564. But it ain't gotta be accurate. You know what I'm saying? Just gotta be in the vicinity. It's not accurate. That 563.98 is really not accurate. It's really 564. 9:45, barely an hour into the market. It's relatively another slow day because Jerome Powell is supposed to be speaking at 1 o'clock Central. That's when the big moves gonna come. When it get close to that 1 o'clock after lunch, when Jerome Powell starts speaking, there's gonna be major moves. Now I'm on the 1 minute, a little bit faster. And see how the lines are still the same? Lets me know that I'm pretty much accurate on my support and resistance. It's pretty much the same. $563.98. Gotta be very careful too when you're going back and calls the puts. Well, calls the puts is a call is your research and your all your indicators are showing you that it's gonna go up. But a put is all your indicators and your research showing you that the market is gonna go down. Sometimes you can get confused. That's why you gotta pay very close attention to the ladder board because that's happened to me a lot of times. I think I'm doing a call, but I'm really doing the put, or I think I'm doing a put and I'm really doing a call. That's from not paying attention. Okay, now it's back inside of here. So I'm gonna change that back to red because now that is back to resistance. I mean, yeah, back to resistance. And this is back to support. We'll be back inside this other channel. If it's gonna break support down here, you can clearly see we're still headed back down. Just like yesterday, but the contracts are 2 times more. Yesterday, these same contracts was $1. Now they are $2 and $2. So for example, so that means that like the contract for yesterday was $1. If I would have held that contract overnight, I would have doubled my money already. Because I paid $1 for the contracts. Now they are over the same contracts are over $2. That's 100% gain overnight. If you hear a lot of that, like lawnmowers and stuff, I got my yard boys are here today. My yard guys, they here. Coming up on 10 o'clock. See how long I've been on? Well, been on live hour and a half. Yeah. Uh-oh. Look like today is even worse than yesterday. Let's see. Yeah, like days like this, right, is a good day to practice. Practice your entries, your exits, because another thing is you can trade with fake money. They got fake money mode right there. And here goes the buy and sell button. Buy, sell. This is on C. This is paper trading, not real money in this mode. See right here, the paper trade mode. Practice. 6 months. See, this is what I'll be talking. This is what I'm talking about. School. 6 months paper trading before you go live with real money. Six months to a year. good skill. The best skill to learn right here is how to day trade these options. That's how you practice. This the buy and the sell button. Boom, boom. That's on my other screen. You put in your orders, quality. 1. Boom. Just like that. This is what's on that screen. All I would have to do is log in and then start paper trading. This is the order. This is the order box. This is the buy and sell. All I'd have to put up is the options ladder. The options ladder. Paper trade mode. That's how you learn. Paper trade for 6 months to a year. Well, you might be smart, Might be super smart. Might not even take you 6 months. And just start off small. Once you pass that 6-month test, as long as your account green after 6 months, you ready to go live. And then start small, go live. You already showed y'all the contracts is $1.75. Today they kind of expensive though, but $1, 75 cents. Well, each contract equals 100 shares. So it's not like it don't cost $1. Each contract costs $1, but each contract is equal to 100 shares. So it's $1 multiplied by 100. See, that's the buy and sell right there. That's for shares. That's not for contracts. I would have to come over here on this computer and set up the board and add contracts right here. The contracts ladder. See, I'm trading the SPY, but we also got AMD, we got nvda, we got Tesla, we got Walmart, Meta, Facebook, Amazon, Apple, Google. Ooh, look at Apple. See, look at Apple. Apple made a move. Let me pull up these Apple contracts. Switch over from see what they cost. Apple. This the option ladder right here on my phone. If you can see the different prices on the contracts. Apple got oh, that ain't Apple. Let's say that was okay, there go Apple right there. Okay. Apple contracts are a little bit cheaper. Apple contracts are a little bit cheaper than the spot. 50 cents, 28 cents. Look, 13-cent contracts. 13 multiplied by 10. Multiplied by 100. 13 cents. 30 cents. 50 cents. $28 for a contract. That's when you go from paper trade mode to real money, you start small like that. $28, $50, like that. And don't be trying to look to flip the 50 to 100. You know, look to make percentages. 5%, 8%, 10%. Real smart with it. You don't look at percentage, you don't look at dollar amount, you look at percentages. I think I gotta say that a lot, you know, because a lot of times we be looking at the dollar amount. Well, how much money? No, you don't look at how much money. You look at how much the percentages are. Because the 8% trade on a small account, money wise, is small, but an 8% trade is a great trade. Because 8% on a big account is a lot of money. 10% on a big account is a lot of money. 10% on a $10,000 trade is $1,000. 10% on a $500 trade, on a $5,000 trade, 10% on a $5,000 trade is 500. I think I might pull a put contract on Apple. One contract, small account, real simple, y'all. I'm just trying to, this is for educational purpose only. One contract on this Apple put that you're looking at right now, hit the high today. What I might do, I might just wait. I might just wait and see if it go back up here. We are on the 3-minute. Let me switch this one on this side. No, I'm gonna keep this over here because we're still watching the SPY. So now I'm gonna switch from the SPY to Apple. This is Apple. we all got Apple phones and Apple computers. Now I'm on Apple contracts. See what this next candle gonna do on Apple. Boom. I didn't get filled. I missed it, y'all. It dumped. Oh, I was right there too. I'm gonna cancel it. I was right there. But I was late on pushing the button, and it dumped. It started to dump, but I missed my entry on that put for it to go down because I see the high of the day right here, right? And the next candle came, but I pressed the button, but I pressed it too late, and I missed my entry. By the time I pressed it, it was already going down on Apple. Missed it. But see, I was waiting to see if it would go back up to the high or somewhere up here and then press the button. But when I see the next candle and it looked like it's gonna go down, I was gonna press the button, but I pressed it too late. This is Apple, y'all. I done switched from the SPY. This the SPY. This we've been looking at all day. And the SPY is starting to go back down. SPY is starting to go back down. Let me get back to Apple. See, Apple made this huge move. Now, let me look at Apple overall. I haven't been looking at Apple that much. Whoa. Put it on 30 minutes. See, Apple made a huge move this morning. They must got some news with Apple. Let me see. Apple came out with some news. Oh, the iPhone 16. Yeah. Impressive reviews on the Apple phone. That's what made it jump. They got great reviews on that Apple phone. Apple is up 1.88% on the day. What's today? Tuesday? Wait, let me see. No, today Wednesday. All right. Let me get back. There's the thing about these Apple contracts. They don't go day to day. They go week. The SPY, which is the overall market, those contracts are day to day. Apple contracts goes out to a week. So if I get a contract with Apple right now, I can hold this contract overnight. And I think I would do that if it can get back up to the high of the day and then just buy a couple of contracts and just hold it overnight. Because of course it's gonna go down. Because it just had good news. Yeah, the news pushed it up, they bought it, but then they're gonna sell it back down. And let me look, a little bit more looking. Yeah, see, it sold off real bad. And then they got good news on that Apple phone review, bounced it up. And it's subject, and there's a good chance it's gonna turn around, it's gonna turn back around. See, I missed my entry. Man, I'd have been up right now. I missed it. I pulled the trigger too late. I'm still gonna try it. I'm gonna just wait and reload. I'm gonna stick with Apple for right now. We got action over here. They got good news. We got action over here on Apple. Or you might say, well, stock sniper, you don't think it's gonna go up even higher? Yeah, it could, but I'm not gonna buy at the top. This could be a bounce play off of the 13 EMA. But I'm not gonna buy at the top. This right here is the perfect play. Reporter, hey, what's up, reporter? How you doing, man? Tuned in. I've been here at XRP. Yeah, that's crypto. Apple had a phone update today out. Yeah, I just seen that on the news when I just looked it up. I knew it was a reason why this was going on because Apple had a good review on that iPhone 16. I missed my entry though. By the time I pushed the button, it was already too late. I want it to go down. I want it to go back down because I think it's already made the move. I think it's already made that move for today. Yeah, I missed my entry, man. But I'm about to pull the trigger anyway for it to go all the way down. Dang, I missed that entry. Oh, got me. I'm down right now, 1% down. I'm down right now. I'm down 1%. I'm looking for the flush down. Keep selling. All right. I'm up now, 1%. I just got one contract, a small contract, $1.20 contract, which is $120. Down 1%. Go on, flush out. See, just like that, I ran up on Apple. Apple got good news today. I was on SPY all day. You know what I'm saying? But then I switched it to Apple. SPY ain't doing too much. So I switched to another stock. You know what I'm saying? Apple. Caught it at the high today. I'm up 2%. Real small trade. You know what I'm saying? Hoping it flush. But if not, I just get out with a small gain. Up 4% now. Come on, go down some more. Go down some more. Just a little small trade. Let me see what it looked like on the minute. Oh, I had it on the 5 minute, and I had it on the wrong. And I had it on the wrong time frame. I had it on the 5 minute instead of the 3 minute. Still flushed down. I'm up 4%. Up 4%. I'm out. I'm gonna take my profit. 5% profit. $5% profit on that. Just small little trade on Apple, entertainment purposes only. Y'all seen I called them, I'm calling these plays, bro. This small little, small little trade, 5% gain on Apple, on to the downside on that good news. Just 5% little gain, practice. Now I'm gonna go back to the SPY. SPY breaking down again. I gotta get it off that 1 minute. I gotta get it off that 1 minute. Yeah, I'm getting my groove up with this StreamYard. My little setup, how I'm doing it. Yeah, I kind of like it. So I'm testing this for a week straight, possibly a little bit more than a week. After that, I'm going full throttle. Right now, I'm just practicing. I ain't done. You can't be done with this. You can't be done. You know what I'm saying? You got to be smart. So when you do something new and you testing something new, you gotta go small. And I ain't tripping. 5% gain. That's a good trade. Cause if I would have did that 5% trade instead of with that $120, if I'd have did that with 2,000, 3,000, 5,000, that 5% would have been a nice trade. So that's why you never look at it as a price amount. You look at it as percentages. That's a great trade. Yeah, I didn't. Well, Stock Sniper, why you didn't see? Normally, people would buy up here as far as, oh, I'm missing out, thinking that it's gonna go up, right? But no, it hit that high today. You never buy at the top. You buy at the top. That you buy at the top when it's gonna go down. You don't buy at the top saying, well, okay, it's going up, 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 up. Let me buy up here because it's gonna keep going up, up, up. No, that's not how it works. When you hit that high of the day and you see this as an example, you know that it's okay. I'm not buying at the top. I'm gonna buy a put contract that is gonna go down. And it's something to go down even more because really it's just going up like this on hype. It's going up like this because Apple had a good review, had good news basically. They had good news, so it went this $4 move. Apple usually don't move like this in a day. So when I flipped it on to some say just go through the other stocks, I went through them. Okay, look at Apple, and I see, well, whoa, I seen that move, and I say, well, hold up, I know Apple don't move like this. So I automatically went to the news of my brokerage app and found out what happened. What happened was iPhone 16, that's not major news, right? So I knew, okay, that's not really no major news, but that's good news. Okay, this is why they had this move. Now they hit the high today. Apple been down. Let me put it on the 30 minutes, just 30 minutes. Apple been down, right? Apple been down. Look, let me go a little bit. Apple been down. Apple been going down. You can see this is over time. Apple been going down. From 232 213. And this 232, and I can't, because of StreamYard, I can't see. Let me see. I'm gonna count the days. 1 day, 2, 3, 4, 5, 6, 7, 8, 9. I'm gonna say 2 weeks. The last 2 weeks, Apple been going down, right? All of a sudden, today, a big move up. A big move up. This is what the Stock Sniper is all about. Y'all just witnessed that trade. This is what the Stock Sniper is all about, right? Big move up. I'm watching. I'm being the sniper in the bushes. I'm watching. I'm going through all these. I'm going through all of these companies. Boom. AMD, NVIDIA, nothing. Nothing. Tesla, nothing. NVIDIA, nothing. Walmart, nothing. Facebook, nothing. Amazon, nothing. Let's go down here to see what Google doing. Nothing. Going down. Apple, boom, big move. All right. I'm in the bushes. I'm watching. Let me see what's happening. Man, I know Apple don't make no move like this in a couple of hours like this, no 4% move in 1 day unless something happens. Man, I got to see what the news is. Go to my news thing, my news feed. Boom, okay. Apple 16, good review. Good reviews on the Apple 16. That's good news, but that's not something to go home and tell your parents about. No. Okay. I know that once it hit this high today, I already know, okay, it's not great. It's good news, but it's not something you go home and tell your mom or your dad. So I knew that, okay, I got my plan, and I'm gonna pull me a put contract. I was hoping that it went back up to here and then pull me a put contract. I know it's gonna go down. You know what I'm saying? So when I start seeing these red candles, I know to pull the trigger. Long as I got this as my gauge, Boom, put my gauge there. You see it, I went over here, pop, came back here, pop, put my gauge in. Once I put my gauge in, I already know, okay, I got my stop loss, right? But then I got all this potential for it to fall back down here. I got all this potential. So I know if it goes up to my stop loss, I just get out for a 3% loss, a 3% loss, or I can get a 10% gain. Well, I didn't get the 10% gain. I didn't want to play with it. So just a little quick little trade, 5% gain, boom, boom, boom. I'm out for 5%. Just like that. Simple. I could have held on to that contract. And it's something to go down even further. But I didn't want to take the risk. And look, it's doing it. If you've been watching me, I've been calling all these plays to the downside. I could have held it and just moved my stop loss. That's my stop loss right there. This line is my stop loss. It would be stop gain now because it's not a loss. And then just move it. And then just move it down. Boom. To about right there. But I just went on and got out because really it was just a practice trade. When ain't nothing going on, practice. Then after you do this for a long period of time, 1 year, 2 years, 3 years, 4 years, you'll be able to call these plays out like what I'm doing. You'll be able to call them out. You will know, you know what I'm saying? But dang, you will know how Apple move. You will know how Amazon move. You will know how these companies are moving. And if you look, everything is red, right? All these companies are red because everybody's anticipating that the FOMC meeting is speaking today. Jerome Powell, to see if they're going to lower interest rates to bring down this inflation. Today would be if he announces that he's going to lower interest rates. This will be the first time that they lowered the interest rates since they raised them up. That's been 4 years. So today at 1 o'clock Central Time is big news. And everybody's waiting on it. That's why I'm still here. Everybody's waiting on it. That's why I'm just playing around. But when 1 o'clock hit, 12 o'clock after lunch, all eyes gonna be on the stock market. All eyes gonna be on the news to see what Jerome Powell is gonna say today. Now look, let's see. Look, if I'd have held on to that contract, I just moved my profits down. Boom, like that. Now there's no way I could lose. And with all this market down, I pretty much know this is coming down because that news about a review is not no hella news. It's not no hellified news. So I know by this, which is the SPY, okay, the SPY. All these, the SPYs are all these are inside of this SPY. The SPY is an ETF, basically a trust. A whole lot of all these companies inside of one. That's what the SPY is. The S&P 500. That's what I usually trade. But then I go down and I look at these companies individually. All these companies are inside the S&P 500. This is the S&P 500, the overall market. So that's AMD, that's NVIDIA, that's Tesla, Walmart, Facebook, Amazon, on and on and on, Apple, who I'm watching now, Google. All of those are inside of this S&P 500. And we're, by the way, this is trade. I'm going to say something about investing now, which is totally different. The S&P 500 is a great investment because it is all the top 500 companies in America is in the S&P 500 SPY. All your diversification is inside of SPY. So if let's say like investment, I'm not talking about trading anymore. I'm talking about an investment, like something, an investment like when you invest your money and hold on to it for 10, 15 years with the SPY. Investment and hold it over a long period of time. For some reason, I can't pull up my monthly and yearly. I got to figure that out on the StreamYard. It's not letting me go to the very bottom where I can show. Let me try something. But it's not letting me show. For some reason, the bottom is not showing. Yeah, the bottom is not showing. I gotta figure it out because down here is where I can go monthly, yearly, like that. So I can stretch this out further than what it is right now. Yeah, I can't. It won't let me do it, so I just gotta go back. But yeah, that SPY is the top 500 companies in America, and this SPY could be used as a savings account. Put your savings account into the SPY, and you get a dividend on that too. Let me go back to Apple. Now I'm talking about day trading again. That was a little bit about investing, long-term investing. Invest into the S&P 500 and hold on and just buy shares every week, every 2 weeks, every month, or however you can, and build up your nest egg in your investment account. Now see, we back to that bottom. So, ooh, we back. Everything look red, bro, except Walmart, Tesla, and Apple. Everything else is red. Once Apple start turning, that's another thing. Only reason why this SPY is not lower than what it is because of the Apple news. Because of Apple. That's the only reason why this is not lower. That's the only reason why this is not lower. Because Apple is inside. Apple is a big percentage of the S&P 500. Apple is one of S&P 500's top holdings. So, only reason why it's not really, once Apple goes down, if Apple goes back down here, we're going to see a huge dump with this SPY. So now I'm thinking about loading up another contract to the downside on SPY because I know all these companies are down, right? Except Apple. Apple is the only thing that is holding up this S&P 500. The Apple is the only thing that's holding this up. Everything else is red. Well, Walmart is only not even a 0.5%. Tesla is not even 0.5%. Once these two go red, Apple is basically the only thing. Look, pay attention. Apple is the only thing that's holding this up from going down, bro. It's the only thing. If Apple loses this 1%, this is gonna dump. Once you know your education and you learn the stock market, bro, day trading, it's not gambling. Y'all, if y'all been watching me for 2 days, y'all seen that I'm calling out all these plays and I'm explaining something to you right now. If you paying attention, the SPY is the overall whole market. Everything is red except Tesla and Walmart. And you might as well say they red too, because look, they dump it as we speak. Look, except these two. And they just about red because they barely up a little bit. The only thing holding up this S&P 500 is Apple. This Apple movement. Once this Apple movement goes down even further, this is going down. This is going down. And it's already doing it as I speak. It's already doing it right now. And just look at Apple. Look, Apple is losing. All those games, when I was over there, when I hit that put contract, Apple was up 4%. Now Apple is up only 1.45%. And as Apple goes down, this is going to go down. Just pay attention to this and this. If Apple ends up going red, this whole stock market is going down. This is going down. Because remember, all of these companies makes up the S&P 500. Look, I'm going to put the arrow right there. Pointing right there. Just watching. 1.38, 1.39. It's probably gonna be a long live, y'all. I ain't never. It's gonna be a long live because I'm staying right here till the Fed come on, till Jerome Powell come on. I'm staying right here. I might take a little break for lunch or just to chill out for a little while, but I will be back. If I do leave, I will be back. I'm gonna leave this on though, but when I come back, it's gonna be around 12:30 Central Time. They go to flush 562.01, 562. Is it gonna break that 562? Boom. See, look at that Apple. Apple, see? I think I might pull me another small put with a tight stop loss. I think I'm about to pull the trigger again. With a tight stop loss. Let me watch. Apple going back up. Y'all see? Apple going back up. SPY going back up. nvda starting to go back up. AMD. See, all of these companies are having a little bounce. Google, let's see what. I think I'm gonna start. Yeah, I like Webull charts. I kind of like Webull, but I think I'm gonna switch back to TD Ameritrade, Charles Schwab, and just use Thinkorswim charts. Just use the charting for Thinkorswim and do my in and outs with Webull. Thinkorswim, Charles Schwab's charting system through Thinkorswim is better than Webull's. But I like Webull because I can use my phone. That's what I like about Webull. I could use my phone as a remote control and press buy and sell. So that's what I think I'm gonna do. Gonna put my Thinkorswim Charles Schwab charts back up and use that for my charting. Yeah, that's what I think I'm gonna do. Webull, you all right? But I got to go back to Charles Schwab on my charting because I can't. Only thing I can do right now is go 1 minute, 2 minute, 3 minute, 4 minute, 5. Only thing I can do is this. And for some reason, I can't see the bottom. The bottom's supposed to have weekly, daily, and everything else, but it don't. And yearly, so I can stretch it out and look at the stock market as an overall whole for like 5 years, 10 years, 15 years, 20 years. I can't do that with Webull. Well, but it's up. Wait, it's up over here on this computer and this screen because I got three things going on at one time. Even though y'all watching that, I got another screen right here, and then I got my big screen right there. Basically, the picture that's inside of my thumbnail, that's my setup. So that's what you see. How my thumbnail looks. That's how my setup is. But on my big screen, it shows the bottom. But for some reason over here, it won't let. Man, let me try. It won't go up no way. Okay, now I can see the time. But where's the monthly, the daily, the yearly? Oh, okay, there you go. I fixed it. Okay, there you go. All right. Yeah, I fixed it. Okay, that problem solved. Now I can 6 month, year to date, 5 years. All right. Back to what I want to talk about investing. This has nothing to do with day trading. This is investing for long term. Okay. You look at the bottom as a small example. Should we look? Okay, this is the max. All right. This is the power of investing. Long term. This is why I say if day trading ain't for everybody, but everybody should be investing, right? To pass down to your kids. Okay. I'm gonna start with the S&P 500, right? We know what the S&P 500 is. Well, if you don't, I'm about to re-explain it. S&P 500 is the top 500 companies in America, which we got AMD. If you don't know what AMD is AI, basically. nvda. Everybody's been talking about nvda, but nvda is the number one company for AI, right? nvda. We got Tesla. Tesla, we all know what Tesla is. Tesla is the leader in electric vehicles. We don't even talk about Walmart. We got Facebook. Everybody has Facebook. Everybody know what Facebook is and Instagram. Instagram, if you don't know, is owned by Facebook. We got Amazon. Amazon, we deliver packages to your house. We got Apple phone. We got Google. 1, 2, 3, 4, 5, 6, 7. Okay. We got Apple, which is the Apple phone, which everybody know what Apple is. Apple phone, Apple Watch, Apple TV, Apple computer. We know what Apple is. Okay. Google. We all know what Google is. We on Google right now, YouTube and all that. Microsoft is not on this list, but Microsoft is in here too. Microsoft, We got Microsoft, we got Google, we got Apple, we got Amazon, we got Facebook, we got Tesla, we got nvda, we ain't got Amazon. All these companies, those companies right there specifically, are a high percentage of this S&P 500. 500 of the top companies in America, which Walmart is going to be in there, Uber is going to be in there. I think DoorDash, all the top companies in America is going to be in this S&P 500, SPY. It's called SPY for short, but it's the S&P 500. That's what it's really called. Okay, as you can see, S&P 500. But the ticker name is SPY. That's what we call it. When you want to look it up, you put SPY, and then that's how you can find it. It's called a ticker symbol. Okay, so this is long-term investment. It has nothing to do with day trading. Anybody can, everybody. Day trading is not for everybody. Reading charts, support, resistance, 13 EMA, 9 EMA, all that that's not for everybody. It's only for special people. Now, I ain't gonna say special people, but people that's interested in day trading. Okay. So, but investing, everybody's supposed to be investing. Okay, we're gonna start off with SPY. The most simplest way to get invested into the stock market is through SPY. I just explained what SPY is. Okay, look. Back in 2010, right? The S&P 500 was $67 a share. This is how you get rich. This is how you build wealth to pass down to your kids, your grandkids. This is how you build wealth. Simple way right here. Stock market. I'm going to go back even further. That's 2010. 1993. 1993. The S&P 500 was $42. Every week, $42. Every week, buy a share, buy 3 shares, buy 4 shares, buy 1 share, 2 shares. Every time you get paid, buy a share, buy a share. You and your old lady together, we buy a couple of shares. To get your income tax, we're going to buy 3, 4 shares. We're going to buy 10, 11 shares, whatever, and just keep building. It's 2007 now. It's 2007 now. Look at the price. It started at 40. Look at the price. Now it's 155, right? 2008 crash. 2008 crash. Where's 2008? 2008 crash, right up in here. That's when, if you wasn't around with 2008, it's when the housing market crashed. Okay, it had a big dump from 150. You can see 150. If you go all the way down this line, 150 as an example, it dumped all the way back down to 267.10. You don't worry about if it goes up or down. You just keep buying, keep buying, keep buying, keep buying, keep buying, keep buying. We buying. Now it's 2013. It's back on the recovery. 146, 150. Now we're back at 150. What it was in 2007. It took 150, basically. It took from 2007 to 2012, basically, to get back to 150, right? From 2007, it took that long to get back up to $150. So in other words, a lot of people was red down up in here, but we ain't worrying about it. We long-term investors. We got the mindset of passing it down to the kids, right? Generational wealth. So you keep buying, even though it's red. You keep buying. You keep buying shares. You keep buying shares. This is America. You know what I'm saying? Keep buying shares. Now we up to 143. Now it's 2012. Keep buying shares. Keep buying shares. Now I'm gonna go further. Now it's 2015. We're up to 200. Keep buying shares. Things are happening. Wars, all kind of stuff. 2000. Now we're at 2017. Now we're at 235. But we steady buying shares. We're getting compound interest all this longer time. Now we're up to 2018. Now we're up to 285. Had a dump. Back down to 240. 2018, 2019. Okay, now we're coming close to the pandemic. Now I'm about to open it up a little bit further. Now we're coming close to that pandemic, bro. I didn't even speak on September 11th, which in my opinion, September 11th was one of the roughest days. They didn't think that America was going to come back from that, because they basically September 11th, them planes, if you don't know what buildings they were, the buildings hit Wall Street, basically. Yes, that's those Twin Towers is the center of this economy in America, Wall Street. Okay. 2020, right there, February. The S&P 500 was $335. Now, we didn't watch it go from, I think it was 2007. We didn't watch it go all the way up to $335, right? Boom, pandemic hit. The pandemic hit, it goes all the way down back to 220, back to levels of 2017. So that pandemic, right, made that market drop all the way back down. So we lost all the way back to 2017. 4 years worth of gains were gone with the pandemic. So, but the thing is, when the market went down, the one thing that people did, kept on buying, right? But guess what? They start flooding all the money, giving all the PPP loans, and they would start giving away all that money. The reason why we're going through the things we're going through right now. Okay, so it was giving money, and they put all that money to the stock market. We got new investors coming in, new people coming in buying stocks. It goes up. Now we get to new president and everything like that. So now we come up to where they say, well, hey, we are about to raise interest rates, which is bad news. But to an investor that knows the game, he's doing this. But at the same time, he's buying all this longer time. All doing this, you steady buying. You steady buying. You steady buying. Now, right here, we up to two folk. We recovered from the stock market. I mean, recovered from the pandemic of $218. You can see it right here. Just follow the arrow. Boom. Now we up here. We're still in the middle of the pandemic or coming towards the end, before 2022. Now we up here. Market hit all-time highs, $481. Then interest rates and all this stuff, prices going up. It dumped all the way back down. It dumped all the way down to the 50 EMA right here, which is if you look at this 50 EMA, that is a major indicator to buy. But you buying shares all this longer time, right? Hold, buy and hold. Now we up to 2025. Look where it's at right now, $566. That's the power of investing. I can't explain it any better than that. Long-term investing from 2010, $140 to $500. That's how you build wealth. That's how you build wealth right there. Long-term investing. S&P 500, long-term investing, and dividends. And this also pays dividends. 15-year period, right? The S&P 500 went from $130, 15-year period. Now it's up to 566. That's the power of investing into the stock market. In the companies that we already know, like, and trust. Most of us have Apple phones. Majority of us are on YouTube. You know, everybody don't have a Tesla, but people, we like AMD. We like AI, the new stuff that's coming out. We like Amazon. You know, we like these things. Wait, what happened? Okay. We like all this stuff. I need to add some more, but we like all these things. That is basically the overall of the stock market. That's how you build wealth, guys. That's how you build wealth. That's how you're able to pass stuff to your kids. And then you take these gains off this stock market and you make other investments, aka real estate, aka gold and silver. That's how you build. Of course, it's gonna be hiccups and all this here, but you have to have discipline. Netflix is on there. I already told you about my Netflix experience, about what I did, that I messed up on. Matter of fact, I'm about to show it right now. What I did. This is what I did with Netflix. I'm gonna tell the story again. I made a huge mistake on Netflix. One of my most costly mistakes. Let me go back. I made a huge mistake that we should not be doing. We should be, our shares, you should hold them. You got to hold on to them. Hold on to them for dear life. This is what I did. I started buying Netflix 2020 around a little bit earlier than that. Around 2016, 2017, I started buying Netflix shares, right? And what I was doing, I was just buying a share. I got up to 100 shares of Netflix. And what I did was I made a mistake. I didn't hold them to 2025. I got into a little jam and I had to sell them. So what I should have did was I should have just held on to them no matter what. In other words, just forget about it. Just keep on buying, keep on buying, keep on buying. Instead of stopping at that 100, I should have kept on buying all through 2020, all through 2021, all through 2022, all through, all over until this day. Now look at what I had 100 shares, y'all. Now look at how much Netflix is today. $700 a share. That's the mistake I made. I did not. I was young. I was younger, right? I was younger in 2017, and I didn't hold. Right? I didn't hold. I got into a jam and I sold them. I sold my shares, which I look back now, I'm like, man, just think about hell, those shares of Netflix, because back then Netflix wasn't, it was basically like they were just playing a bunch of old movies on that platform. It was not, I didn't envision Netflix to be what it is today. I didn't think it was going to be, I didn't think like that. So in my mind, Netflix was a company in my portfolio that I didn't value as much. And that was my biggest mistake. That was my biggest mistake, not valuing Netflix. And look where it is right now, $700. Basically, my average was right around 90, like 100. My average was 100. And I could have kept on buying shares through all those years and could have had at least 250 to 300 shares in the savings in my backpack. You know what I'm saying? I could have had 300 shares basically up under my belt today. I'd have had more than 100. I'd have had at least 300 because I was buying it on a regular basis. And I know I'd have kept buying over time all the way up until 2024. I really would have bought a lot when it dumped all the way back down to 196. I mean, I really would have been, buying, but I didn't have the vision of Netflix. So I basically got rid of that particular company in my portfolio, and I made a huge mistake because now Netflix stuff to go up to 1,000 a share. But I would not make that mistake with NVIDIA. That's for sure. I'm not going to make that mistake with NVIDIA at all. Or AMD. I will not make that mistake with these two companies. Matter of fact, that's why I say I had to change my mindset. You know what I'm saying? I didn't have that mindset back then to think about they not mine, like the sheriff, they're not my shares. So once I adapted that mindset, I know for a fact I won't do that again because the shares are not mine. They for somebody else. And that's how I program my mind to get over those difficulties, not my shares. So I try to buy AMD or NVIDIA every chance that I get. That's what I try to do. I don't know what happened, but my whole thing changed. But yeah, basically that's basically a little thing about investing. Investing long term. Okay, now I'm back. And then it went back. And well, I can't see the bottom. Let me see monthly. Yeah, it went. Go. Okay, there I go. What stock am I on now? Think I'm still on S&P. Yeah, I'm back on the S&P 500. So I hope you understood that little showing I did about investing long term, 15, 20 years and more. But day trading is something totally different, but everybody should be investing. Everybody should be investing in some of these companies, like buy S&P, but then also buy these companies individually. Amazon, Apple, uh, Tesla, NVIDIA, AMD. Apple's back on the move. See, that's another thing. Somebody could have caught this bottom and maybe it might go back up there and ride it back up. What time is it? 11:15. back on. Apple look like it's rolling, running back up. Everything's pointing upward. And it's lunchtime. Yeah, I think I'm gonna go back to my chart swab just for the charting. Yeah, I kind of like old StreamYard though. I haven't had any problems with it. I haven't had any problems with StreamYard so far. Well, it's lunchtime. About to take a little break. I'll be back around 12 so I can get ready for that Jerome Powell. See if they're gonna announce that they're gonna cut the interest rates. No. Move back on up, okay. Move back on up there then. Oh man. I'm still on break. I'm back. It's almost 1 o'clock. Let's see what's happening. Okay. Okay. We bounced. See what movement we're gonna get during this Jerome Powell speech. What am I looking for?
Today's day that we're seeing acceleration to the downside. Kathy, what do you think the reaction function is right now in markets in terms of both the short end and the long end when it comes to 25 versus 50?
You know, my guess is the market is vulnerable at the short end if it's only 25, because we built in a pretty high probability of 50 at this meeting. So the short end will be vulnerable. If the Fed goes 50, and you don't really have a sense of, what their outlook is longer term, it's unclear, then the long end might be susceptible on the growth of inflation fears. But I think that's a play for down the road.
12 minutes away before the decision if they're gonna cut the interest rates
10-year
and start giving people a break.
They have for a long time. They're a little bit below that, but not so much that I think that there's a huge market reaction.
Jerome Powell speaks.
One way or another from the next 7 days.
Kathy, as you know, it's not just the
Will we done?
it's the package. It's a 3-part act. We've got a statement, a decision, forecast, and a news conference. I want to talk about the complete package here. If this is a low conviction meeting, how can we expect this Federal Reserve to provide any clarity about the outlook whatsoever? This is a market price for return to neutral, not just 25 or 50 today, but a one-way trip towards 3 percentage points. And I struggle to see how we get a full understanding of where the Federal Reserve is going when they fail to commit to whether they go 25 or 50.
That daily we at the top on the daily. September.
Yeah, I think we always ask for too much, right? There's some sort of expectation that the Fed knows what the path is.
We're at the
precisely
top.
Will lay it out for us. I mean, I remember the years before there were press conferences or, announcements or anything. So, I can harken back to times when the market was surprised by what the Fed did and didn't do. And I think it's sort of intellectually honest to simply say, here's what we expect, here's what we're looking for, here's what we're aiming for. But look, a lot of things change, a lot of things come up over time. It can't be expected to provide 100% certainty about what's going to happen.
Well, I look at this, I think John's dead on his board right now, you're so it's 25 to 50 basis points. To me, the ECB does a dramatically better job of sending here's our growth guesses. Are we gonna see growth guesses today, or are they conviction in nominal and real GDP?
I think you're gonna see growth guesses, you're gonna see unemployment guesses, you're gonna see inflation guesses. And there have been guesses because they have been proven it's just wrong. And is that even the full complication is broken down. When I listen to Kathy, yes, it's not the irony of the as well. But the whole point of central banking is to avoid this unnecessary uncertainty because it can break something in the system. So going back to those days, it's going again.
I'm gonna load up my contracts right now. What I'm gonna load up is tomorrow's contract, not today's.
Then J. Powell is unclear, the committee is unclear
Okay,
enough to not want to lay out.
I'm gonna load up tomorrow's contract.
Forecast. They'll say, this is just a forecast, we're driving down that foggy road. We're trying to go slowly so we don't run off.
Put side.
I think that is providing a certain honest assessment that this is a very unusual cycle. It's not following any pattern that we're accustomed to. It is a global cycle. I think they've been pretty clear. We're headed lower. They want
Or
to
should I go with the TQQ?
They have an estimate of neutral, which the market is pricing in. The speed, maybe
TQQ.
taking the fast road, or we're going to take the slow lane. Maybe that is in question right now, but I don't think that the direction or the destination, so far as it's been laid out, is really clear. At least as far as the market is concerned. So you have priced in a lot, and I think that that's a reflection of the estimates that we've had so far and some of the communications we've had so far. So
Yeah, I think I'm gonna go with the TQQ this time. TQQ is similar to the SPY.
Hey, Kathy, it's good to catch up as always. Kathy Jones there of Charles Swan. I'm so pleased we've started to talk about the ECB. This is all great. We talked about this a few times. But TK, can you imagine?
See what these contracts looking like on the TQQ.
Communicates in a way that Christina Garland, Central Bank, has said things like, we're going to take this meeting by meeting. We'll offer you no guidance whatsoever. Commit to a thing. We'll have 25 basis points today, and we'll see you.
I really don't like that spread.
And the smartest thing I saw today was a single sentence from a guy in Malaria off some tweet.
Put side got a
For just patriots. So Mohammed said.
5-cent spread.
Because he mentioned ECB, but he did mention the Bank of England and the Bank of Japan and Washington. This is a global lead, John.
It is, and I think what we're going to see this week is dispersion within the general theme of lower rates. So I suspect, I know the Fed will come today. I suspect the Bank of England will not meet tomorrow, and I suspect the Bank of Japan will meet on Friday. And just be a reminder that while we talk about a global cycle, there's dispersion within this global cycle.
Back-to-back decisions into Thursday, the Bank of England on Friday, the BOJ. 7 minutes
Spreads on these contracts.
Of Bank of America.
That's 2 cents spread.
Start with the base case. What you're looking for from this Federal Reserve, the decisions, and the kind of changes to the forecast you're looking for in about 7 minutes' time.
Good afternoon. Thank you for having me. So we're in the 25 gap. I think Mohammed made the case articulately, but let me give it a shot and keep it simple. So if you remember the blackout period after the jobs report, the Fed nodded to us. That was an opportunity to tell us we want to go 50. They could have made that case out. They chose not to. During the blackout period, the data we got were sticky inflation, solid retail sales, strong industrial production. So that should make the case for 25 stronger, not weaker. Obviously, we've gotten some nods towards 50. Those are from voices outside the Fed. I think it would be concerning for the Fed credibility perspective if they give the impression that those voices are now more powerful than Fed speakers.
That said, some people argue that the Fed is far above neutral because of the rate. And then if they're going to cut and try to get back down to neutral, given where inflation is, the slower they go, the more restrictive in a way they actually are. Economically, does that argument hold water to you?
It's a reasonable argument, and they could have made that case if they could do, right? So here's what they could have said. They could have said, this is very similar to the mid-cycle adjustments of 1995 and 20. It's just that we're not neutral, as you said, Lisa, and so we need to come down
5 minutes away.
to 50 rather than 25. If they had communicated that clearly, they would have potentially been fine. Right now, the risk is that the market keeps pushing you to do more. So if you do 50 today, everything could still work out fine, but the risk is.
I got my TQQ
Big data, and that's inevitable when the economy is slowing down a bit.
contracts up, but I really don't like the spread. Where I like that one. I like that one.
Consumer may slow down. We're waiting. I'm talking 4.85% nominal GDP. Is the consumer slowing down? The consumer has been removed.
Is that too far down the ladder?
At the start of the year, which is probably what was being referred to. But if you look at
Yeah, that's too far down the ladder, bro.
not surprised. There's been a rebound.
And the volume and the open interest is not really there.
So that's
I don't like that one.
in a labor-driven slowdown is that eventually the consumer
4% spread from that.
Aditya, I understand the arithmetic that leads to the hypothesis that we are very restrictive because we're way above neutral. I don't know a single indicator of financial conditions that doesn't flash very good financial conditions. So can you reconcile the two for us?
Yeah, I think neutral could be higher, right? So what do we know about neutral really, to be honest? I think we can say with some conviction that it's somewhere between 2.5% and 4%. Beyond that, I don't think we can say a lot.
Yeah, we back in the middle. Back was kind of like when we started this morning. We had one good move down, another good move up, and we were basically back when we started from this morning. We go back to the spot. Yeah, same thing.
They might go up in the future. On the flip side, if we do go into a recession, which is not a base case, then you would say, okay, we were actually a lot more shifted than we thought it was.
Aditya, appreciate your insight as always. Looking for 25 in 3 minutes' time. Aditya Bhaveer there, Bank of America Global Research. I'm pleased we got to this discussion. Equity markets close to all-time highs. Bond yields are low. Spreads are tight. We've had a round trip through the whole.
We're back where we started this morning.
For debt worldwide, across Europe, here in the United States as well, both sovereign and corporate. And look at what's happening with mortgage applications.
2 minutes.
Before we even see the first interest rate cut, we're already starting to unlock a lot of activity.
Until Jerome Powell starts speaking.
Which to me just highlights the reason why people treat the markets is they're an adolescent looking for more, and you give them a little bit, and then they're looking for even more. This idea that if the Fed says, fine, you guys can have your 50 basis points, but then they're going to keep going with that, and that's going to create much easier financial conditions.
It's already starting to move up.
What the pandemic did to our economics and our system. Are we still in the pandemic?
No, I think we've mostly exited with the labor market being the last sector to adjust.
Do you think we're bubble temperature here?
When he starts speaking, you're going to start seeing this chart go crazy.
These kind of levels.
I think we've gotten carried away.
Let me put it.
Both on stocks. I think both on stocks.
Why is that?
I think stocks, you can make stories for secular changes. I think the bond market, you're making the argument. If you make it, then you should go the other way because we have fiscal deficits of 6 to 8%. We have high debt levels. The secular argument isn't in their favor in the bond market.
2 issues. The last few weeks we talked about
Man,
debt
these.
out of Italy, record order book. The week before we had debt out of the UK, record order book. We saw some of the busiest days we've ever seen.
Even the SPY has a spread.
Market in America. tons of demand to back it up.
And when you ask people why, they say there's cash out there and people want to lock in yields.
Moving like crazy, bro.
I love the story idea that basically you can come up with a story for stocks, but the story for bonds doesn't work logically with where these.
You go.
That I think is the key. If you're storytelling, stocks
Whoa.
make more sense right now than the story that is the bond.
Didn't you say this morning this is a market where logic comes to die?
Yes.
Isn't that what you said?
Yes.
50 basis point increase.
I'm not at the mark. This is the countdown to the Fed decision. It is literally seconds away. Going into your stores.
Everything green now.
S&P 500 on an 8-day history in the bottom. Same score as follows. Your 2-year yield in America has been moving lower over the last month. Yield 3.65. Your Fed decision with Michael Clear.
It's 50, and the promise of another 50.
Ooh, good news. All right.
2025, which would put the nation's benchmark rate at 3.4%. It's projected to fall.
Good news. Good news.
26, which would put the rate at 2.9%.
Good news. 50 basis points. Great news.
That is a tenth from June.
Great news. Great news. Let's go. Ooh.
Unemployment will hit 4.4% this year. That's an increase from the.
They cutting interest rates, y'all. Great news. 50 basis points.
2.3% this year, falls to 2.1 next year. And here's
Big news. Big news.
they cut because they now have greater confidence. Inflation is
50 basis points. Wow.
Target, and the risks to inflation and the labor market are roughly balanced. While they could not explain why they decided on a half-point reduction, the statement says the committee is strongly committed to supporting maximum employment. And remember, in Jackson Hole, Chairman Powell said any deterioration in the labor market would be unwelcome. There was one.
Wow. So they cutting interest rates, y'all. They now look, if you don't understand that, they have been raising interest rates all this time. That's the reason why everything, the prices and stuff, been going up. They was raising inflation. They was raising interest rates to try to bring inflation down for 4 years, right? But now this is the first interest rate cut, meaning that the interest rates are going to start going lower, and they did it 50 basis points. That is better than expected. That's great news. That's why everything is red, everything is green now. That's great news. We got a big pullback coming right now.
141 on that currency pair.
Yeah.
Great news.
They hike. How much does that divergence continue? I also want to point out gold. You're seeing a bid into gold right now. We'll start to look for some of the inflation proxies. So we'll really sort of feed into that idea. I thought it was interesting. The long end of the yield curve, just on the margins, not significantly, yields just slightly up on this idea that they're going to go bigger and potentially even more down the line.
So the median dot can mask the disagreement beneath the surface. So let's talk about the range and not just the median of the FOMC. The median dot for 2025 in the projection materials that are just published is 3.4%. The range for 2025 is anywhere from 2.9 to 4.1. 2.9 to 4.1. That's quite a range of this FOMC. And I think for the first time in a long time, we have
Wow.
publicly as well.
What news?
The FOMC.
That's great news.
This was not.
But we still got to wait on them to speak.
Kind of was simple. Just to add to that, officials considered 100 basis points or more of cuts for this year. 9 officials considered 75 basis points or less for this year. Actually, that's quite a bit for market expectations, especially given the
Great news.
So TK, we got 50. Conference.
The Jackson Hole, you touched on something Jason Furman touched on this morning. which is don't forget the Dallas. Where as direct as I can, is the great unknown here a dollar weakness that anybody without gray hair doesn't know?
That may not know. I think we've seen it before. I remember there is a ton of weakness.
That's what the stock market is all about, y'all.
50 basis point cut.
Thank you. Yes.
Now, I agree with you, John, that the dovish spot comes from
What it's about.
But if you look at the range, it doesn't look like dovish, but that's not what the
Yeah.
We can look at this as a dovish 50 basis points cut.
Great news, though. Great news. Finally, we're going to get a little breathing when it comes to all these high prices.
To some extent, this median dot validates market pricing coming into this decision.
Finally, the interest rates on your loans and stuff are going to start to go down.
We've still got news.
Finally.
We've asked the last several weeks into this. Are we going to end up with disappointment on the other side of this news conference with Chairman Powell? What would your question be now?
So first of all, normally he's more dovish than
I didn't think it was going to be 50 basis points.
This time, but
I really didn't.
My question will be, what has changed since July when you decided?
Fed see rates at 4.4% at end of 24. They expect them the rates to be at 3.4% in 2025. That's great news.
Months later. Joining us now to discuss is Bob Michael at JP Morgan Asset Management. He joined us out of London this afternoon. Bob, we just want your first impression to the decision. What do you make of it?
It hit on pretty much everything we were looking
First rate cut in over 40 years, y'all. Big news. Big news. Big news.
But otherwise, has been positive for the last week, nothing to quibble about. Provides honest information right now. Is it a real deal? Is it the nominal full faith and credit? What's the most valued about Michael right now? Credit spreads. Credit spreads.
Big news.
Whether investors believe the economy is in dire shape and this is an emergency 50 basis point cut, or whether this is just a Fed along a meeting or two away from where they should have started the cycle, so they're starting to get towards neutral. All is well.
Okay, all is well. And yet what we saw earlier this morning was an increase in mortgage applications. What we've seen is already the bond market pricing in on all of this and then some, and basically
Big news.
purchase that even more. Do you not see the risk of potentially reignited inflation, Bob, that we could potentially see expressed in the long end? As Bob was mentioning, we are seeing that yield curve steepening in a way that hints at something else amiss, especially when paired with gold.
Whoa.
And it skipped a quarter basis points and went straight to a half a point. Off the top, they went straight to a half a point. Let's see what some of these companies are doing. Basically the same thing. nvda, Tesla, Walmart, Meta, everybody going up. Not Apple.
They highlighted to us that the neutral Fed funds rate.
Well, Apple went up, but yeah, Apple spiked too with the news.
So they can start taking pressure off.
Everything's turning around right now, though.
Well, I know they told you about Michael, but you told me earlier it was about Michelle.
Serious moves.
I came to London because I thought we were going to QP.
Okay.
Now you're in New York on me?
This will be support.
London tomorrow. So Bob, speak a little bit to the revision.
Wait, let me move this.
And particularly unemployment. What do you think of that?
To here.
I think
Move this.
They pushed it up.
There, that's lower support.
I think they have to. I think
Move this.
to acknowledge that we're at a
Basically
challenge
right there.
that there are new entrants to the labor market.
That's where we're at right now. But it's not over because
US workers, and they have
Jerome Powell still has to speak. That was just the announcement. He still has to speak, which should be coming up soon.
I'm okay with that.
Yeah, but Bob, I think we've got to talk about this a little bit more. Please, we went to unemployment. Unemployment right now in America is at 4.2%. These are the Fed's projections out in 2024 year end, out to 25 beyond. They've got projections of 4.4%, the median projection for unemployment this year. Next year, they've got it at 4.4%. Given the move we've seen over the last 12 months, Bob, how aspirational is that? How realistic is it that we just pause around these levels for the next 18 months?
Well, we very well could. If we get 225s over the next two meetings and we bring rates down 100 basis points, what we know is there's still a shortage of housing. There are first-time home buyers queued up to buy homes. So bringing rates down could bring those buyers into the market. We also know that a lot of businesses don't fund themselves in the public bond market. They fund themselves through bank loans, through private credit.
Big old move.
Those are floating rate loans. Those are anywhere starting with SOFR at 5 3/8%, 100 basis points off of that. That could help to stabilize things as well. Just because unemployment has headed up over the last year doesn't mean it has to keep going. It can certainly flatten out here if the Fed does its job.
Hey Bob, appreciate catching up as always. Bob Michael there of JP Morgan Asset Management. There's a couple of moves in this market that I think are very, very interesting. We've just gone 50, and in some ways the dot plot is validating what we were pricing in this market ahead of time as well. And what you're seeing in the long end is the long bond sell off and yields flying by 2 basis points. Not a big move, but it's noticeable. We're up by 2 items on 30s, we're up by 3, and at the same time you've got gold at all-time highs. What is this market sniffing out?
Well, it's sniffing out on the margins a greater inflationary risk than otherwise priced in. Look, I can make an argument about how it might mean that we're going to suddenly get runaway Germany style inflation. That's not what it's saying. But what it is saying is that on the margins, the idea of a bigger and frankly a dovish 50 basis point rate cut really highlights how inflation is still back on the table, at least on the.
They're talking about a Georgia stage balance. Your impression is that it's a single mandate central bank now. And you don't think we should take our eyes off the other side of the mandate? Is the market speaking to that, just on the margin this afternoon?
I think at the margin, yes, but I do think that this is the reaction of a single mandate Fed right now, especially if you believe 2% is inflation.
Let's cross over to Dan Swan, Brinker and KPMG. Dan, we'd love your thoughts on the decision, and then we can get into the nuances. What do you make of the 50 instead of the 25?
I think it's starting to cool off.
This was a huge victory for
The
and his Jackson Hole speech.
the spreads are coming back to normal now,
And that is what this is about.
and the market is dumping.
Doing a dissent, Powell willing to take a dissent among the board members as opposed to among the president. That is how much he wanted this 0.5% rate cut. And I think that's very important. I think you're going to see it couched and explained within the context of several participants at the July meeting thought they were ready to go ahead and cut. So this is a bit of a catch up to that. And so that should help temper a little bit this dovish read on it. I was surprised that they kept the risk balance, although clearly the focus is now on employment and not allowing the situation in employment to become much worse. Remember, we're at 116,000 payroll gains, 3-month moving average as of August. That's not statistically different from zero. Combined with the downward revisions we saw on August 21st, the day before Powell gave his remarks at Jackson Hole, those downward revisions, record downward revisions, even if they're not as large as they appeared because of some immigration that we're not capturing, they're still large, and it means the birth to death rate,
They can cut rates. That's good. Boy, that's good.
Effective September 19th, for the federal.
Way more than what I thought.
To undertake
Man.
operations as necessary to maintain federal funds rate in a current range of 3 to 0.75 to 5%. Conduct standing overnight repurchase agreement operations minimum bid rate of 5%. And aggregate operation limit of 500. Conduct standing overnight reverse purchases, reverse repurchase agreement operations at an offering rate of 4.8% and with a per counterparty.
That's a fact.
Per day. Roll over.
I mean, a lot of them, it's gonna be a lot. And then you get these high areas too.
Federal Reserve's treasury, securities.
Man, trying, boss. I'm trying. So I'm still trying to do God's work. Ah, you better not.
Pretty keep much more. Treasury goes to the extent that that's our less cap. So we get the point. We got 50 basis point fund deck and waiting for the Federal Reserve. Like that. I mean, speech at this point. For example, we just got. That's on that. So 25 to including myself.
I have my birth set. I mean, I have my thing is set.
I'm happy about it. I'm actually happy. Truly, I'm happy about it.
Switching over contracts like crazy, trying to get it all set up for 30 before you start speaking.
You got
Exactly.
Other than thanks for hanging out with us until this was all down. I appreciate you.
Come on, man.
Hey, we got 150
Dollars.
Thank you guys so much for subscribing to the channel.
Yeah, I'm okay. Stay out of here.
Most focus on small caps, but I do always get my opinion by that. Like, you know, like I guys know. I haven't been adding as much as that. What's that? Tesla, let it go.
I'm about to.
So I added back here. I ended up taking
I'm trying to get set up since waiting for Jerome Powell to speak. Come on. Give this my Tim Harder. All right, we good. Bye. Going tablet. I know, going tablet. I didn't see no curse there. Had to make sure I ain't cursed since you heard me. What's going on with go sit? I know, go sit. Sit. Damn. My contract already started moving. They don't think we'll go back out to my area. Dog.
Appreciate you all guys.
All right, go. Yeah, I got me a contract. I'm in. Go on, keep going. 12%. 12%. 13%.
Ripping and running, man. I'm trying to hop from one thing to the next. I apologize. Appreciate you, Silverback. So I got two of them. I got two, is that the same one? Okay, I got the Federal Reserve too. Okay, got it. Appreciate you, boss. Appreciate you. Shout out to Silverback.
Go, push.
We got help? I got a minute left. How long have I worked with you once?
Come on, push, bro. I'm up 20%. Before he speak, I'm about to get out. Out.
I was trying to get before he got in. Big stuff. Man, this is great. I was trying to catch these lows, man. You know, slightly charts on anything. Prices.
Everyone got out 30% profit. Trade Jerome Powell. Yeah. Yep. Just like that. Just like that. That's good news, bro. I was hoping, see, I got in right up in here. It went up under support. It broke this. I waited for the next count. I got in and rolled it up. I was hoping it pushed all the way up here to resistance, but it didn't. So when I seen this red candle, I went on and got out. It still might push up there, but I went on and took profits because one thing about these movements, when there's news like this, it can easily go from this red candle, it can easily go from up here all the way down in a matter of seconds. So I was watching really closely. If you can notice, I took it off the 3 minute and put it on the 1 minute. You know what I'm saying? Because I know it's gonna move so fast. I had to put it on a faster time frame. These are 1 minute candles. Now, usually I got them on 3 minute candles, but with this type of movement, I need them on 1 minute candles. Each one of these candles are 1 minute apiece. So that means that even though I caught all this for 30%, well, from here to here, 30%, this could have automatically went wow all the way down there. So once I seen it wasn't gonna break this to go up to there, I went on and got out on that red candle. See, watch. See, it's doing it now, breaking down. And that's a matter of seconds, because those are minute candles. If I'd have held, look, if I'd have held on, I'd have, I'd have lost out. But I caught this breakout. Now everything is green. So that means that, before I've been looking for it to go down because everything was red, right? Now everything is green. So now all I got to do now is figure out my support, figure out my resistance, and catch the bounce plays. But see, I could have got in over here and caught all of this, but that's too risky because just like it could have did this, it could have been the opposite. It could have been super red. Maybe he didn't raise it up to 50 basis points. Maybe he didn't, maybe his decision was to not just to keep the interest rate like it is. This would have dumped. So that's like risky. That's like gambling. That's gambling. If I'd have went on the hill knowing that, okay, the meeting is coming, because we didn't know the decision. So because now that's gambling. Not knowing, right? I get in right here and I'm just speculating. It's 50-50 chance. It's 50-50 chance that he might cut the rates. There's a 50-50 chance that he might keep them at the same. That's gambling. So the decision is out, right? Great news. So now everything is green. So now I put my trading plan together after the news and before he starts speaking. Because we don't know what he's going to say when he starts speaking in a few minutes. Game time, baby. So he's probably speaking right now. Let me turn it back. Let's see if he's speaking.
previously after the first rate cut in 1968. So
Function from here, and how does he respond to that? Does he?
No, he's not speaking yet.
Either for another 50 basis point or even higher rate cuts. Manasati, the Deutsche Bank.
He's not speaking yet.
Man's still with us, but we love asking this one too. So I'll ask it for you.
So let me move this up because this is not support anymore. This is support.
Concept of an equilibrium, long-term neutral.
That's support now.
Expired.
I'm gonna move this down here
Shouldn't they be talking?
and move this
Real Fed funds rate, maybe minus 1% to plus 3%.
right here,
I mean, for goodness sakes, in my
right there.
the Fed funds rate.
And I need to get rid of this altogether.
So trying to target
Yeah.
something like that is nonsensical. to me.
Now see, it bounced off this line, bounced off support.
Asset management. We get 50 from the Federal Reserve. Your news conference is 5 minutes away. The price action looks like this, up a half of 1% on the S&P 500.
We probably gonna break this line and that line, but I just couldn't take that chance to hold that contract. I just couldn't take the chance. So I just took my profit. I took my 30%.
Market expectations, it seems like they did. The projections going forward really highlight how this market likes to run ahead of even where Fed pricing is. Look at this. If you take a look at Fed fund future pricing, we're actually pricing in a 4.1% Fed funds rate to end this year. So we're talking about an additional almost 100 basis points of additional cuts from here, 150 basis points of cuts, which just again points to why a dovish 50 basis point cut has made a difference in this market.
If they go 50, the pressure will build to go 50 again. Is that what's happening?
That is what's happening, and the market loves this. And it's been the repeated condition of the market. Give it something, it will last more.
I look at this, at every press conference, John, when we get to the political questions. Like if I was to parachute John to the Alarian Institute of Behavioral Economics and Policy,
Would you behave?
the first thing I would behave, and the answer is there's two United Kingdoms out there and there's two Americas out there, and he has to address within his neutrality and the political debate those two Americas.
Jerome Powell should be on in about 3 minutes.
Kevin, what to do next?
How does he navigate some of those issues?
A green line of support.
For two very different experiences in this economy.
It's very difficult. It's even more difficult when
Broke support.
Go 75.
Till 75. No, it is really difficult. What's not clear to me is if he is actually buying insurance, what is the cost of that insurance? What is the downside of buying insurance? Insurance hardly ever costs us. So what is the downside of having bought insurance for the economy? And that's something we'll only find out at the time.
Well, what's the cost of buying insurance for the economy, but also for the Fed and for its political independence and its reputation therein? I just wonder if it's more difficult to make the decision now on November 7th, now that you've had this initial 50 basis point rate cut, and you have a market that's now saying, yeah, you could do another one in November.
Yeah, and that was the argument all along. Start in July. Don't get yourself in this situation, but it is. They're now going to have to navigate.
That was a great trade. That was a 30%. That was a 30% trade.
Politically, just like he will say that he is blessed, to use his word, by lots of opinions from outside, but ultimately it's what they decided that.
And then we'll get lots of opinions after this one. In just a moment, 2 minutes away, Chairman Powell.
Great trade, 30%.
It's a news conference for the next 50 minutes or so. We'll take that in its entirety on Bloomberg TV and on Bloomberg Radio. Lisa, things could
See, it bounced off that support line again.
Repeatedly, I don't think you can overstate it. Things could be very different. The outlook for 2025 could shape up in a rather different way, depending on what the complexion of Congress looks like, how divided things are in the nation's capital.
And whether or not we even know at that point, as Anne-Marie likes to say, whether we have a decision, it just will be interesting how much this is a three-part act. We get the third part of the act coming up. It melts away.
Everything else is starting to move up.
What this insurance policy is really for is
NVIDIA.
we are seeing true weakening in a labor
Everything
market.
looks just alike. That's AMD.
It's one of the key questions.
That's NVIDIA.
Is this a one-off mid-cycle adjustment?
That's Tesla. Walmart is dumping. That's like it's the only one that don't look the same. Facebook, it looks the same. Amazon pretty much looks the same. And then we got, well, Apple don't look that much like those. Apple got his own thing going on.
The time that has defied a lot of historical precedents. it's gonna be a really difficult one for him to really,
It's gonna be difficult because they're coming out of a pandemic and they're making it up every meeting, every day, and every speech as they go. They're making this up as they go. Today, they catch up, maybe, is the right way to put it. But the then what of November and into 2025 is real.
We certainly all agree on that. We've said this a few times. We've all been humbled through this pandemic and coming out the other side. Equities right now going into this one just short of all-time highs on the S&P 500. We are firmer by 0.5% in the bond market. This is the yield reaction. On a 2-year, we're down 4 basis points going into this news conference. Just remember, for 7 consecutive Fed decision days, this 2-year has rallied. This yield has dropped, and that continues at least for now. We're down 4 basis points at the front end of the curve. The chairman of the Fed Reserve, after cutting interest rates by 50 basis points,
There you go.
takes the floor.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state. Inflation has eased substantially from a peak of 7% to an estimated 2.2% as of August. We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by 0.5 percentage point. This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate growth and inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.2% in the first half of the year, and available data point to a roughly similar pace of growth this quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment fell back in the second quarter after rising strongly in the first. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee Let's see.
Sit back up. Sit back up slightly, guys. Sit back up. Sit back up. Still pushing, guys. Still pushing. Still pushing. Still pushing. Be careful. Be careful. Still pushing. Push. Don't go chasing. Let it go. Just let it build. Let it build. Go ahead. Wait, you mean 68?
Our primary focus had been on bringing down inflation, and appropriately so. We are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our restrictive monetary policy has helped restore the balance between aggregate supply and demand, easing inflationary pressures and ensuring that inflation expectations remain well anchored. Our patient approach over the past year has paid dividends. Inflation is now much closer to our objective, and we have gained greater confidence that inflation is moving sustainably toward 2%. As inflation has declined and the labor market has cooled, the upside risks to inflation have diminished and the downside risks to employment have increased. We now see the risks to achieving our employment and inflation goals as roughly in balance, and we are attentive to the risks to both sides of our dual mandate. In light of the progress on inflation and the balance of risks, at today's meeting, the committee decided to lower the target range for the federal funds rate by a 0.5 percentage point to 4.75% to 5%. This recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we begin the process of moving toward a more neutral stance. We are not on any preset course. We will continue to make our decisions meeting by meeting. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 4.4% at the end of this year and 3.4% at the end of 2020. These median projections are lower than in June, consistent with the projections for lower inflation and higher unemployment, as well as the changed balance of risks. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we could dial back policy restraint more slowly. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation back down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our population. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Steve, who's been CNBC, bigger questions. In July, you said you weren't necessarily thinking about a 50. You didn't want to be specific, but you said you were thinking about a 50. The inflation data last week came out a little firmer than expected. Retail was strong, third quarter GDP running 3%. So what changed that made the committee go 50? And how do you respond to the concerns that perhaps it shows the Fed is more concerned about the labor market? And I guess, should we expect more 50s in the months ahead? And based on what should we make that call? Thank you.
So, okay, a lot of questions in here. Let me jump in. Since the last meeting, we have had a lot of data coming. We've had the 2 employment reports, July and August. We've also had 2 inflation reports, including one that came in during blackout. We had the QCEW report, which suggests that suggests that the payroll report numbers that we're getting may be artificially high and will be revised down. You know that. We've also seen anecdotal data like the beige book. So we took all of those and we went into blackout and we thought about what to do, and we concluded that this was the right thing for the economy, for the people that we serve, and that's how we made our decision. So that's one question. What was the second and third?
Sorry, thank you, sir. How do we figure out in the months ahead, is there another 25 or 50 coming in based on what shall we make that call? Thank you.
Sure. So a couple things. A good place to start is the SEP, but let me start with what I said, which was that we're going to be making decisions meeting by meeting based on incoming data, the evolving outlook about the business. If you look at the SEP, you'll see that it's a process of recalibrating our policy stance away from where we had it a year ago when inflation was high and unemployment low, to a place that's more appropriate given where we are now and where we expect to be. And that process will take place over time. There's nothing in the SEP that suggests the committee is in a rush to get this done. This process evolves over time. Of course, that's a projection. That's a baseline projection. We know, as I mentioned in my remarks, that the actual things that we do will depend on the way the economy evolves. We can go quicker if that's appropriate. We can go slower if that's appropriate. We can pause. But that's what we're contemplating. I would point you to the SEP as just an assessment of where what the committee is thinking today, but the individual members rather of the committee are thinking today, assuming that their particular forecasts
Hi, Chris Rugaber, Associated Press. Thank you. The projections show that the Fed officials expect the
Walmart is the only thing that's red.
Their estimate of long run neutral by the end of next year. So does that suggest you see rates as restrictive for that entire period? Does that threaten the weakening of the job market you said you'd like to avoid? Or does it suggest that maybe people see the short run neutral as a little bit higher? Thank you.
I think the way I would really characterize it is this. I think people write down their estimate, individuals do. I think every single person on the committee, if you ask them what's your level of certainty around that, they would say there's a wide range where that could fall. So I think we don't know. There are model-based approaches and empirically based approaches that estimate what the neutral rate will be at any given time. But realistically, we know it by its works. So that leaves us in a place where we expect in case to be continuing to remove restriction, and we'll be looking at the way the economy reacts to that, and that'll be guiding us in our thinking about the question that we're asking our committee is our policy stance. We know, if you go back, we know that the policy stance we adopted in July of 2023 came at a time when unemployment was 3.5% and inflation was 4.2%. Today, unemployment is up to 4.2% and inflation is down to a few tenths above 2. So we know that it's time to recalibrate our policy to something that is more appropriate given the progress on inflation and on employment moving to a more sustainable level. So the balance of risks are now even. And this is the beginning of that process. I mentioned the direction of which is toward a sense of neutral. And we'll move as fast or as slow as we think is appropriate in real time. And what you have is our individual accumulation of individual estimates of what that will be in the base case.
Howard Schneider with Reuters. Most was this in terms of decision. You didn't have the first dissent by a governor since 2005, I think. Was the weight clearly in favor of a 50, or was this a very close decision?
I think we had a good discussion. To go back, I didn't address the question of the size of the cut, left it open. I think we left it open going into blackout. And so there was a lot of discussion back and forth, good diversity of division, excellent discussion today. I think there was also broad support for the decision that the committee voted on. So I had to look at the SEP. All 19 participants wrote down that's engineered, all 19. That's a big change from June. Of the selling.
Good bounce off that 200 EMA. What a bounce.
So, you know, there is dissent and there's a range of views, but there's.
Come on, man. Why it's not loading up on here?
Follow for that.
Gee.
On the pacing here.
Was that it?
This to be running every other meeting, once we get into next year.
We're gonna take it meeting by meeting. As I mentioned, there's no sense that the committee feels it's in a rush to do this. We made a strong start to this, and that's really, frankly, that's one. I think it's confidence that inflation is 42% of the state business. That gives us the ability. We can, make a good strong start, but and I'm very pleased that we did.
What a bounce off at 200.
It's clear. But I think we're going to go carefully meeting and make our decisions as we go.
Hi, Jerome Powell, from the New York Times. Thanks for taking your questions. Your colleagues in your economic projections today see the unemployment rate climbing to 4.4%.
Bounce off that 200.
Historically, when the unemployment rate climbs that much over a relatively short period of time, it doesn't typically just stop, it continues increasing. And so I wonder if you could walk us through why you see the labor market stabilizing, sort of what's the mechanism there, and what do you see?
It's not loading up over here.
So, again, the labor market is actually in solid condition. And our intention with our policy move today is to keep it there. You can see that on this pace.
Man, hold up. Walmart even green now.
Yeah, that's what we're looking.
Man, bro. I do not want to look at it.
Catch up in action here in recent.
Right there.
Vision,
Showing them.
data. Or is this larger than typical? The policy being such that an accelerated cadence could be expected to continue.
Okay. Multiple questions there. So I would say we don't think. But I think you could take this as a sign of our commitment not to get it right. So it's a strong
Push.
Having the employment data between this meeting and last meeting, or is this about the level of the funds rate, the high and non-level of funds rate relative to what might be expected if you're trying to maintain equilibrium?
I think it's about we come into this with a policy position that was put in place, as you know, I mentioned, July 2023, which was a time of high inflation and very low unemployment. We've been very patient about reducing the policy rate. We waited under central banks for cut many of them several times. We've waited. And I think that patience has really paid dividends in the form of our confidence that inflation is moving sustainably at 2%. So I think that is what it enables us to take this strong move today. I do not think that anyone should look at this and say, oh, this is the new pace. You have to think about it in terms of the base case. Of course, what happens will happen. So in the base case, what you see is look at the SEP, you see cuts moving along. The sense of this is we're recalibrating policy down over time to a more neutral level. And we're moving at the pace that we think is appropriate given developments in the economy in the base case. Develop in a way that would cause us to go faster or slower, but that's what the base case is.
See if this other one is working over here.
2019, when you did this,
Still not working.
Ceased the balance sheet runoff. With the larger cut today, should there be any signaling about how the committee would approach end state on the balance sheet policy?
So in the current situation, reserves have really been stable. They haven't come down. So reserves are still abundant and expected to remain so for some time. As you know, the shrinkage in our balance sheet has really come out of the overnight RRP. So I think what that tells you is we're not thinking about stopping runoff because of this at all. We know that these two things can happen side by side in a sense they're both a form of normalization. And so for a time, you can have the balance sheet shrink, but also be cutting rates.
Well, it'd be nice to push Wade uphill.
Thank you, Kobe Smith with the Financial Times. Just following up on Gina's question on rising unemployment, is it your view that this is just a function of a normalizing labor market amid improved supply, or is there anything to suggest that something more concerning perhaps is taking place here, given that other metrics of labor demand have softened too? And I guess in direct follow-up to Gina is, why should we not expect a further deterioration in labor market conditions if policy is still restrictive?
So I think what we're seeing is clearly labor market conditions have cooled off by any measure, as I talked about in Jackson Hole. And but they're still in a level. The level of those conditions is actually pretty close to what I would call maximum employment. You know, so you're close to mandate, maybe at mandate on that. So what's driving it? Clearly, payroll job creation has moved down over the last few months, and this bears watching. And by many other measures, the labor market has returned to or below 2019 levels, which was a very good, strong labor market. But this is more sort of 2018-17. So bears close watching, and we'll be giving it that. But ultimately, we believe, with an appropriate recalibration of our policy, that we can continue to keep the economy growing, and that will support the labor market. In the meantime, if you look at the growth of economic activity data, retail sales data that we just got, second quarter GDP, all of this indicates an economy that is still growing at a solid pace. So that should also support the labor market over time. So, but again, it bears watching, and we're watching.
The point about starting to see rising layoffs, if that were to happen, wouldn't the committee already be too late in terms of avoiding a recession?
So that's our plan, of course, has been to begin to recalibrate. We're not seeing rising claims, we're not seeing rising layoffs, we're not seeing that, and we're not hearing that from companies. So that's something that's getting ready to happen. So we're not waiting for that, because there is thinking that the time to support the labor market is when it's strong, and not when you begin to see the layoffs. There's some work on that. So that's the situation we're in. We have, in fact, begun the cutting cycle now, and we'll be watching, and that'll be one of the factors that we consider. Of course, we're going to look at the totality of the data as we make these decisions, meeting by meeting.
Michael, we keep it Bloomberg TV and radio. To follow up on that, what would constitute for you and the committee a deterioration in the labor market? You're pricing in basically by the end of next year, 200 basis points.
Go all the way up there. Go all the way to the tip of the top.
A higher unemployment.
Go all the way up to that line.
Moving to a more preemptive monetary policy style.
14%.
As you did with inflation.
Go up to that line.
The data gave you a signal.
14%.
We're going to be watching all of the data, right? So if as I mentioned in my remarks, if the labor market were to slow unexpectedly, then we have
Go up to that line. Go.
by
I'm not going to wait that much longer for you to make it up there, though. Go.
greater confidence that inflation is moving at 2%, but at the same time, our plan is that we will be at 2%, over time. So, and policy, we think, is still restricted, so that should still be happening.
How sensitive you'll be to the labor
Go.
forecast. We are going to see higher unemployment, and it is going to take a significant amount of monetary easing to just maintain it.
So, what I would say is
I'm out. Only 7% on that one. I was waiting on it to go up to there, but when I seen this red, I just got out for the 7%.
take a step back.
I was waiting for it to hit this.
Situation where we restore price stability without the kind of.
It still might hit it, but I just couldn't take the chance. I seen that second candle come out red, I just got out.
That's what we're trying to do. And you can
7% on that one.
action.
I got a 30%, 70%, the 5% from earlier.
Hi, Turbo. Rachel Siegel from Washington Post. Thanks for taking our questions.
I held that one a little bit longer than I wanted to. I held through all of this because I got in right here, and I was red down here, and then it popped back up And when it did this, I was looking for this touch right here at resistance, but it didn't go up there. It automatically came back with another red candle on that next candle, and I got out. Like right now, see about it held? I just went on and got out. It was a 7. It didn't do what I wanted it to do. I wanted it to automatically shoot up, but it started turning. So I got out for the 7%. For the 7% gain.
Adjusted for demographics for
now I might reload when it come back down here. I got the same contracts loaded. The same contracts. And these contracts are 50-cent contracts.
Would be very longer term to be consistent with
50-cent contracts.
Coming down to what's sustainable. We'll feel good about that. Vacancies over per unemployed is back to what's still a very strong level. It's not as high as it was. That number reached 2 to 1, 2 vacancies for every unemployed person, as measured. It's now below around. It's around. That's still a very good number, I would say. Quits have come back down to normal levels. I mean, I could go on and on. There are many employment indicators.
And if you've been watching me, when I say contract. One contract equals 100 shares of this spot.
Few months, and so what we say is
one contract equals 100 shares.
To inflation have really come down.
So with that, 50 cent, it's not 50 cent a trade, right? It's 50 cent a contract, and each contract has 100 shares.
In a very good position to manage the risks.
So that's $50 per contract.
To learn between now and November that will inform the scale of the cut at the next meeting.
More data than usual. Don't look for anything else. We'll see another link report. We'll see another jobs report. I think we actually get a second jobs report on the day of the meeting. I think on the Friday before the meeting. And inflation data. We'll get all this data. We'll be watching. It's always a question of.
And I'm doing 20 contracts apiece.
And ask
so you can pretty much do the number.
Looking at the balance of risk, and then go through our process and think, what's the right thing to do? Is policy where we want it to be to foster the achievement of our goals over time? So that's what it is, and that's what we do.
Chair Powell, Jerome, Axios. We've only been running a little above 100,000 jobs a month on payrolls the last 3 months. Do you view that level of job creation as worrying or alarming, or would you be content if we were to kind of stick at that level? And relatedly, one of the welcome trends of the last couple of years has been labor market steam coming out through job openings falling rather than job losses. Do you think that trend has further to run, or do you see?
Now I'm just waiting on another trade.
Cooling have to come through job losses.
So on the job creation, it depends on the inflows, right? So if you're having millions of people and you're creating jobs, you're going to see unemployment go up. So it really depends on what's the trend underlying the volatility of people coming into the country. We understand there's been.
It's about to be 2 o'clock. Market closes at 3.
And that has actually been one of the things that's allowed unemployment to rise. And the other thing is just the slow hiring rate, which is something we also watch carefully. So it does depend on what's happening on the supply side. And on the beverage curve question, yes. So we all felt on the committee, not all, but I think everyone on the committee felt that job openings were so the part of the curve.
Right there, boom. Back down, but we're gonna bounce off support. Support is the green line.
I mean, I think we are. It's hard to know you can't say with great precision, but certainly it appears that
these contracts now are down to
so that further declines in jobs
32 cents
will translate more directly into unemployment. But it's been a great ride down.
And if you've been listening, each contract is equal to 100 shares, so that'd be 32 cents multiplied by 100. That's how much one contract would be. So one contract is $32.
federal funds rate to 3.5, maybe under 4%. And it's basically an entire generation.
And it broke down support.
Zero or near zero.
And it's steady breaking down.
There's something we're heading in that direction again. What's the likelihood that cheap money is now?
Now that same contract is $25 for one.
It's just great question.
10 is $250. 20 is $500. So on and so on.
We're probably not going back to that era where there were trillions of dollars of sovereign bonds trading at negative rates, long-term bonds trading at negative rates, and it looked like the neutral rate was quite to be negative. So there was people were issuing debt at negative rates.
Now that same contract is $23. It's steady going down. Now it's $20 for one contract. 10 is $200. 20 is $400.
It feels
and on and on and on and on.
That the neutral rate is probably significantly higher than it was back then. How high is it? I just don't think we
could there be a bounce?
Works.
Let me see if my original charts are back working.
Get a deeper rate cut now before the election has some political motivations.
Yeah, so this is my 4th presidential election at the Fed, and it's always the same. We're always going into this meeting in particular and asking what's the right thing to do for the people we serve, and we do that. And,
23 cents. $23.
That's always what it is. It's never about anything else. Nothing else is discussed. And I would also point out that the things that we do really affect economic conditions for the most part. With
22.
So nonetheless, this is what we do. Our job is to support the American people.
Now it's touching that.
Right. This will benefit the American people significantly. So
13 MA, I think that's what the red. Wait. Oh no. That's my support line. It's up under all EMAs. Now it's dumping, y'all. And everything is pointing down.
Thank you, Chair Powell. I'm Jerome with CBS News. My first question is, very simply, what message are you?
For some reason,
American consumers,
my original setup, the chart is not showing.
The U.S. economy is in a good place, and
I don't know what's up with that. But it's showing there, so I just keep it there. I just don't have all the 13 EMA and the 9 EMA. I just have basically my support and my resistance.
Still in solid shape. So our intention is really to maintain.
Okay, that's $20, 19.
Returning rates from their high level, which is really
contracts are getting cheaper and cheaper.
Which has been to get inflation under control. We're going to move
as we go down
to a more normal level over time.
Follow up to that, listening to you talk about inflation moving meaningfully down to 2%, is the Federal Reserve effectively declaring a decisive victory over inflation and rising prices?
No, we're not. So inflation, what we say is we want inflation. The goal is that inflation move down to 2% on a sustainable basis. And, we're not really, we're close, but we're not really at 2%. And I think we're going to want to see it be around 2% and close to 2% for some time.
Well, it's making me want to flip it and go to the put side, go back where I was to the put side.
We're encouraged by
and keep it. It make me want to keep going. Give me a contract for tomorrow.
Katarina Saraya, Bloomberg News. I just
keep going.
The committee is thinking about the persistence we've seen in housing inflation. Do you think you can return to 2% with housing inflation where it is?
So housing inflation is the one piece that is kind of dragging a bit, if I can say.
563.05
are doing what we want them to do, which is to be moving at relatively low levels, but they're not rolling over.
Move this support.
Are not coming
in. Move it down there. Yeah.
Coming in high. So, it's been slower than we.
It's 2 o'clock. Got an hour left.
Understand that it's going to take
in the market
for those lower market rents to get into this, but the direction of travel is clear, and as long as market rents remain
you know, relatively low inflation over time that will show up. Just the time it's taking now, several years rather than just one or two cycles of.
I've been on live all day.
So that's, I think we understand that now. But I think the out of the long difference remain under control.
Now, this is for educational.
Say it's the rest of the portfolio of the investments that go into core chief.
And entertainment purposes only.
Pretty well. You know, they all have some problem. We will get 2% inflation, and I believe that ultimately we'll get it out of.
This is my reaction video
Some of the colleagues have
to the stock market.
with starting with cut rates, you could reignite demand.
Now,
See prices go up.
I think I'm about to pull me a put contract.
Likelihood of that.
Yeah.
The housing market, it's hard to game that out. The housing market is in part frozen because locking with low rates, people don't want to sell their home. So because they have a very low mortgage, be quite expensive to refinance. As rates come down,
561, 62.
that's probably beginning to happen already. But remember, when that happens, you've got a seller, but you've also got a new buyer in many cases. So it's not, you know.
Boy, steady falling knife, y'all.
Additional.
Buy the rumor, sell the news.
The real issue with housing is that we have had and are on track to continue to have not enough housing. And
It's already priced in, like they say.
It's hard to find to zone lots that are in places where people want to live.
It's already priced in.
The aspects of housing are more difficult, and you know, where are we going to get the supply? This is not something that the Fed can really fix. But I think as we normalize rates, you'll see the housing market normalize. And I mean, ultimately, by getting inflation broadly down, getting those rates normalized, and getting the housing normalized, that's the best thing we can do for householders. And then it's
already priced in.
It's by the market and also by government.
Hi, Victoria Guido with Politico. Just following up on some of the labor market talk earlier, you know, monetary policy.
End of the day, it's already priced in.
And I'm wondering how much you see being able to keep the
got
rate from raising.
55 minutes left.
From the fact that you're starting to act now, and that's going to give people more room to run versus just the labor market is strong. And then also, if I could, following up on Nick's question, do you see today's 50 basis points as partially a response to the fact that you didn't cut in July, and that sort of gets you to the same place?
So you're right about.
Or every time they bring up the basis points, it jumps.
You have an economy that is growing.
As soon as they say basis points,
look at forecasters or talk to companies.
come on, man.
Say that they think 2025 should be a good year too. So,
Boy, I tell you.
the U.S. economy basically fine. If you talk to market participants, I mean, you know, business people who are actually out there doing business. So you know,
you all right, but I gotta go back to TD Ameritrade and Charles Schwab. Yeah, I gotta go back to that. So I gotta go back to TD Ameritrade and Charles Schwab on my chart. Cause y'all playing me right now, we boy.
You know, if we got into July,
y'all playing. I can't load up nothing on my board, bro.
We might well have we didn't make that decision, but you know, we might well have. I think that's not, you know, that doesn't really answer the question that we ask ourselves, which is let's look, you know, when at this meeting we're looking back to
employment
report, the August employment report, the two CPI reports, one of which came, of course, during blackout, and all of the other things that I mentioned. We're looking at all of those things and we're asking ourselves, what's the rate? What's the it's clear that we literally everyone on the committee agreed that it's time to move. It's just how fast you think about the path forward. So this decision we made today had broad support on the committee, and I've discussed the path ahead.
Thank you, Chair Powell. Elizabeth Schulze with ABC News. Mortgage rates have already been dropping in anticipation of this announcement. How much more should borrowers expect those rates to drop over the next year?
Very hard for me to say. That's from our standpoint. I can't really speak to mortgage rates. I will say
that'll depend on how the economy are.
We back to where we started
We think that our policy
earlier today.
is appropriately restrictive.
Let me go to 5 minutes now.
Process of
Yeah, we pretty back where we started.
it's more neutral rather than restrictive. We expect that process to take some time, as you can see in the projections that we released today. And if things work out according to that forecast, other rates in the economy will come down as well. However, the rate at which those things happen will really depend on how the economy performs. We can't look a year ahead and know what the economy is going to be.
To people, households who are frustrated that home prices have still stayed so high as rates have been high, what do you say to those households?
Well, what I can say to the public is that we had a burst of inflation. Many other countries around the world had a similar burst of inflation, and when that happens, part of the answer is that we raise interest rates in order to cool the economy off, in order to reduce inflationary pressures. It's not something that people experience as pleasant, but at the end, what you get is low inflation restored, price stability restored. And a good definition of price stability is that people in their daily decisions, they're not thinking about inflation anymore. That's where everyone wants to be, is back to what's inflation. Just keep it low, keep it stable. We're restored. So what we're going through now really restores, it will benefit people over a long period of time. Price stability benefits everybody over a long period of time just by virtue of the fact that they don't have to deal with inflation. So that's what's been going on. And I think we've made real progress. We don't tell people how to think about the economy, of course. And of course, people are experiencing high prices as opposed to high inflation. And we understand that's painful. Okay.
Chair Powell, Greg Robb from MarketWatch.com. I was wondering if you could go through, you said just at the beginning that coming into the blackout, there was like an open thought of 25 or 50. The Fed could move either to 25 or 50. I would sort of argue that when we had those two last speeches by Governor Waller and New York Fed President John Williams, that they were sort of saying that maybe a gradual approach was going to win the day. I mean, I sort of want to ask a 7-part question about this, but I mean, could you talk, would you have cut rates by 50 basis points if the market had been pricing in low odds of a 50-point move like they were last Wednesday? After the CPI number came out, it was a really small probability of a 50-point cut. Does that play in your consideration at all? Just talk a little bit about that. Thank you.
We're always going to try to do what we think is the right thing for the economy. Right? That's what we'll do. And that's what we did today.
Thank you, Chair Powell. Simon Krinovich with The Economist. You've mentioned how closely you're watching the labor market, but you also noted that payroll numbers have been a little bit less reliable because of big downward revisions. Does that
right back up there?
Employment rates, given the S&P projection of 4.4 basically being the peak in the cycle, would going above that be the kind of thing that would trigger another 50 basis point cut?
So we will continue to look at that broad array of labor market data, including the payroll numbers. We're not discarding those. I mean, we'll certainly look at those, but we will.
And that's a 3-minute move.
Based on the QC.
Put it on that 1 minute. Yeah, that 1 minute, you can really see some movement.
There isn't a bright line. It will be.
We'll leave it there.
Like the unemployment rate's very important, of course, but there isn't a single statistic or a single bright line over which that might move and would dictate one thing or another. We'll look at each meeting, we'll look at all the data on inflation, economic activity, and the labor market, and we'll make decisions about is our policy stance where it needs to be to foster over the medium term our mandate goals. And so I can't say we have a bright line in mind.
Thanks, Chair Powell. Betty from CNN.
Yep, it's about to head up there to that red line.
Fed does whatever the right thing is, and nothing else factors in. But
in general, can you talk about whether or not you believe a sitting US president should have a say in Fed decisions on interest rates? Because that's something that former President Trump, who obviously points of view, has previously suggested. And I know the Fed is designed to be independent, but why? Can you tell the public why you view that so important?
Sure. So countries that are democracies around the world, these that are sort of like the United States, all have what are called independent central banks. And the reason is that people have found over time that insulating the central bank from direct control by political authorities avoids making monetary policy in a way that favors maybe people who are in office as opposed to people who are not in office. So that's the idea, is that, you know, I think the data are clear that countries that have independent central banks, they get lower inflation. And so we do our work to serve all Americans. We're not serving any politician, any political figure, any cause, any issue. It's just maximum employment and stability on behalf of all Americans. And that's how the other central banks are set up too. It's a good institutional arrangement. It's good for the public. And I hope that and strongly believe that it will, you know, continue.
Kyle Camp, American banker. Thank you for taking the questions. Sure, Kyle. A couple regulatory developments in the past week that I want to ask you about. First, last week, Vice Chair for Supervision, Michael Barr, outlined his views for the changes to the Basel III Endgame. You are in alignment with him on what those changes should be, if those have support on the board in a broad way that you're looking for, and if you think the other agencies are also fully on board with that approach. And then yesterday, other banking regulators.
You know what? Hold the second question. Okay, sure. Let me give you the second question. Sorry. The answer to your question is that yes, those changes were negotiated between the agencies with my support and with my involvement, with the idea that we were going to repropose the changes that Vice Chair Barr talked about, and then take comment on them. So yes, that is that's happening with my support. That's not a final proposal, though. You understand? We're putting them out for comment. We're going to take comment and make appropriate changes. That we don't have a calendar date for that. And as for the other agencies, you know, the idea is that we're all moving separately. So I don't know exactly where that is, but the idea is that we will move as a group to put this again out for comment, and then, you know, it'll come. The comments will come back 60 days later, and we'll dive into them, and we'll try to bring this to a conclusion sometime in the first half of next year.
And yesterday there were merger reform finalizations from the other bank regulators. What does the Fed have to do to align itself on merger?
You know, I would bounce that question to Vice Chair Barr. It's a good question, but I don't have that today. Thanks.
Thank you, Chair Powell. Jennifer Schoenberger with Yahoo Finance. You said earlier that the decision today reflects with appropriate recalibration strength in the labor market that can be maintained in the context of moderate growth. Even though the policy statement says you view the risks to inflation and job growth as roughly balanced. Given what you've said, though, today, I'm curious, are you more worried about the job market and growth than inflation? Are they not roughly balanced?
No, I think, and we think they are now roughly balanced. So if you go back for a long time, the risks for inflation, we had the historically tight. There was a severe labor shortage, so very hot labor market, and we had inflation way above target. So, you know, that said to us, concentrate on inflation, and we did for a while, and we kept at that. That the stance that we put in place 14 months ago was a stance that was focused on bringing down inflation. Part of bringing down inflation, though, is cooling off the economy and a little bit cooling off the labor market. You now have a cooler labor market in part because of our activity. So what that tells you is it's time to change our stance. So we did that. The sense of the change in the stance is that we're recalibrating our policy over time to a stance that will be more neutral. And today was, I think we made a good, strong start on that. I think it was the right decision. And I think it should send a signal that that we're committed to coming up with a good outcome here.
Vulnerable to a shock now that could tip it into recession.
I don't think so. I don't just, as I look, well, let me look at it this way. I don't see anything in the economy right now that suggests that the likelihood of a recession, of a downturn is elevated. Okay, I don't see that. You see growth at a solid rate. You see inflation coming down. You see a labor market that's still at very solid levels. So I don't really see that now. Thank you.
Well, I think that's it. Last question is on.
Live from New York City this afternoon. Good afternoon for our audience worldwide. Welcome to a special edition of Bloomberg.
U.S. economy is strong overall.
Decision as follows: a 50 basis point cut with a sprinkle.
50 basis point cut. Good news.
A quarter of 1%. On the Russell, still elevated up by more than 1 full percentage point. Straight out of the gate in that news conference.
Boy started selling off right after he got off. Wow. Right after he got off, big sell off. End of the day. Big end of the day sell off. Is it gonna break that 561, 62? Or is it gonna bounce? Look, it bounced right off of it. Ooh, perfect bounce. Perfect bounce. See? Perfect bounce. Perfect bounce. Perfect bounce. About a 50-cent bounce. Perfect bounce, though. Whew. How long have I been alive? 5 hours. Well, over 5 hours, I think. Yeah, coming up on 6 hours. So I'm gonna stop at 6 hours. I got 9 minutes left. 9 minutes left, and I'm gonna go and get off. Great day, great day. Overall, great day. %. At the end of the day, 37% gain. Two trades after 1 o'clock, 30%, 37% gain on Jerome Powell's news. I hope everybody had a great day, having a great day. If you have been on here looking, if you catch it on the replay or whatever, hope you learned something. Hope you see something about this stock market, man. It's another tool to have in the toolbox. And it can retire you. Trust me. It just take a little time to learn all this stuff. Take time, it take years. Maybe not, you know. Some people are smarter than others. Might not take you that long. Especially if you like it, you know, and it's something you'll be interested in. So good. Everybody should be invested. You should be investing in the companies that you know, like, and trust. You got an Apple phone, there's no reason why you shouldn't be owning no Apple shares. You use YouTube, ain't no reason why you shouldn't. And you Google search, ain't no reason why you shouldn't own Google. And Microsoft, Amazon, we use Amazon, and on and on and on. And there we go, back up to the upside, up to that green line, to that blue line. What it's gonna do? Is it gonna break it? Is it gonna break the line? Look like we're heading into a W pattern, which is a W. Boom. Boom. Skyrocket. Are we forming an end of the day W pattern? A big U shape? W. U shape. Up to this red line to break it. The best entry would have been down up in here at support, or right up in here, which is support as well. Going into that W, going into that W pattern. Can he complete that W pattern at the end of the day? Can he do it? Can he complete the W pattern by the end of the day? Let's see. 26 cents away from completing that W pattern. Here we go. It wants it. It wants it bad too. Like a magnet. It wants it bad. Or will resistance keep it from going up there? Remember, this is resistance. Resistance. Will resistance knock it down? Looks like resistance held up. Yep. Once you establish good support and resistance, and you understand support and resistance, in and out. Resistance, no, support for the upside is the best entry, and resistance for the downside. Though that these two areas are the best entries. Get in and support, ride it up. Get in at resistance, ride it back down. If you get in at support and it don't go your way, because a lot of times it don't go your way, you got to have a stop loss. And up here, resistance, and it don't go your way to the downside, you got to have a stop loss. But it ain't gonna go your way every time. You just gotta have a tight stop loss. A tight stop loss. Now let's see. See, I got how long I got left. We got 30 minutes left in the market, and I got it's almost time for me to get off. Boy, that few minutes went by fast. Man, hold up. I might just stay here till I ain't gonna do nothing no way. Might as well sit here. See, this is the option board right here. Call that green. You should know what green mean. Green mean it's going up. Puts mean it's going down. So you can. What is this? This Netflix. I need to change. That's Netflix. Okay, see? That's the spot puts. This is your options ladder. You see the prices of them? $0.93, 91 cents. The bid, the ask. This is the ladder. This is where I be picking my contracts from. You can pick. They got right now contracts for $1, 64 cents, 39 cents, 22 cents, 12 cents. But of course, it's not 12 cents because each contract is 100 shares. So this would be $14. This would be $22, 42, 68, $107, and up and up and up, 407. You can pick your price range. Particularly, you want to stay inside close to the money. This is how much the stock price is. You want to stay here, here, or here, here. But you also want to keep them cheap. You can get to 21 cents, but particularly you want to be up in here, close to the money. But this is the options ladder. And this, of course, is the chart. Yeah. And you see it changes. September 18th, 2024, Then you can go lower than that. That's 10. That's 20. See, you got some cheaper than cheap, 6 cents, 10 cents, 19 cents. That's what you would be practicing with once you do 6 months of paper trading. Then you'll start small. You know, start small and take your profit. So that's the options ladder. I gotta see if it still ain't working. I don't know what's going on. Probably have to reset it or something. None of them working. End of the day, sell off. It didn't make it up to the resistance. It made it up there, but it didn't break resistance to complete the W pattern. It just, it hit resistance, and that's what resistance do. Support is the floor, resistance is the roof. Sometimes you break through the roof, sometimes the roof holds up and bring it back down. But once you understand that, you know how to get in and cut your losses quickly. Or if you get the good bounce, take your profits. Whatever your percentage target is. Mine is usually between 8 and 10, but sometimes I will let it roll. It just depends on what's going on. And if I get around 5%, sometimes like I did earlier, I just get out. If I see it ain't going my way, and you get that, learn that by experience of watching these charts and watching the movement of these candles. That's how you get that. Look like it might come back down to support. I just think you see it go up, bam. All right, I'm gonna pull me a put contract to the downside, and you went on and pulled it, and you got your stop loss right there. But you get you get a red candle, and you ride it down. That's probably about 30%. And then if it come back down here to support, you can pull a call contract to the upside and have a stop loss down here. Yeah, that's how it works. Pull the trigger all day long. You sit and watch me. Y'all sit and watch me pull the trigger. I did 2 of them already at the end of the day. I did 1 at the beginning of the day. I did another 2. Usually I do about 2 or 3. Sometimes I just do 1. It just depends. Depends what's going on. Every day is different. But today I had this, usually I don't be on at the end of the day like this. Only time I be on the end of the day like this, if it's something, an activity happened, like what Jerome Powell, something big that I know it's going to be movement, then automatically, or earnings, right? You know, every 3 months is earnings. So I be on for earnings too. Like if nvda having earnings, if Tesla having earnings, whatever, you know what I'm saying? Amazon, you know, I be on for earnings. Cause it'll be a bunch of movement. And you can get in and get out real quick. If you know what you're doing, you can get in and get out. You know what I'm saying? Like I made 30% on the first one, and then the other one I made 7%, for a total of 37% on this event, which was great news. You know, the economy is overall strong. Everything is, you know, now we can have our first rate cut, so it's starting to look pretty decent. You know, hopefully it stays like that. And hopefully some of these food prices will start going down a little bit. Some of these interest rates on these houses or whatever or these vehicles will start going down a little bit. Hopefully the gas start going down a little bit more, you know, and everything is, you know, I don't think it'll never go back to what it was in 2018 or 2019, but it'll get better than what it is. So hopefully it's just stay like this. Gets better. You know what I'm saying? They keep on cutting the rates, keep on cutting the rates. Inflation keeps going down, get back down to that 2.5% where they wanted it at. And then that's, you know, America start getting into a better place. So what time is it? It is 2:40, might as well say 2:45. Got about 15 minutes before the market closed at 3 o'clock. It'd have been wonderful to see this W shape break this resistance and skyrocket, but it looks like we're going back down. This what I be doing. I just be that's what I used to do all the time. Figuring this out. Figuring out these movements. That's a little bit. Yeah. Basically figuring out these movements. End of the day sell off. I don't know what happened with this. Let me try something else. Boom. So that's how you make a quick board. That's the options ladder. I'd have my board, I have my options ladder right there, my chart right there, my order book somewhere right here or wherever place you like it to be. The order book is where you buy. It's a turbo trader. Have that up. The turbo trade to buy and to sell. You know, set it up, put it where you like it to be at. See your options, pick your options, load it up. You got your buy and your sell right here. You watch, read the charts. Whichever contract you want. We got your puts over here. Puts are down. If the market goes down, you do your analysis and your charts and your technical analysis. And your analysis says that the market is gonna go down. You picked your contract. 35 cents, $35, $18, $10, $742. You know what I'm saying? $248 for one contract, however many you gonna buy. Call side, you do your analysis, green, that means it's gonna go up. Here go your contracts. $80 contract, $77. You buy at the ask. Have your buttons already set up. These the buttons right here. Buy, sell. But if I was to log in, you know, the buy and sell buttons would be right here with all your account information, your profits, your losses, everything. It's right there. Buy, sell, puts. Yeah. That's a quick little tutorial on how to set up your board. It's kind of simple. That's all. See, that's what I like about Webull though. Like if you knew, it's easy to set up. Like TD Ameritrade, Charles Schwab, that's advanced. It wouldn't be as easy as that. You know what I'm saying? Like if you wanted to set up a new board, all you had to do was go there, boom, blank. Click here to add widgets, blank. You know what I'm saying? Real simple. Go over the quick quotes, bang, set your chart up, set your option board up, set your turbo trader. Put your news up. There go the news. So you see what's going on in real time. You know what I'm saying? Like that. Simple, easy. Webull is so simple for new people that's trying to learn how to do this. Then once you get advanced, then you start playing with TD Ameritrade and Charles Schwab, which is my original brokerage account. Yeah, that's the main one that I use. It's Charles Schwab and TD Ameritrade. But I like Webull too because it has a great mobile app. And it's easy to, it's a better version of Robinhood. You know what I'm saying? It's easy to navigate like I just did. I just set up a chart that quick, simple, and you ready to rock and roll. But if Charles Schwab and TD Ameritrade and all these other major platforms, brokerage accounts, I mean, you really have to, it take a while. You really got to know what you're doing to mess with them. They are more advanced. So I just go over there, normal. And blank, make a whole new board. That's how it works. And then what I like about it, it got the paper trading aspect where you can fake money, you know what I'm saying? The same setup as real money, but you put it in not real money mode until you get it down pat, until you learn everything. You gotta have all this stuff in muscle memory. And it takes time. Some people are smarter than other people though, you know? So, but I always tell people, you gotta paper trade at least 6 months to a year. But when you finish that 6 months, your account, your profits, your overall P&L for that 6 months should be green. Once it's green, go on and start small. Go on and start small with real money. Go on and start small with real money. And starting small is like I just showed earlier. The contracts are real cheap. You can, once you graduate from paper trade, then that's when you, because it's different. Paper trading and then doing it with real money, it's a lot of nerves and feelings involved. But you ease your way into it once you finish doing the paper trading, and you know what you're doing, and you got it all down pat. Then you switch over. Okay, you switch the account over to real money. Then you pick your contracts. Simple, one contract, $20. That's how much this contract is. $37. For an example, $78. That's how cheap these contracts are. You know what I'm saying? Like that. $20. You know what I'm saying? And work your plan like you was doing on your paper trading account on the real money account. And then don't worry about it. That's why I don't like talking the dollar amount. You know what I'm saying? I like talking percentages. And then when you start small and you get this down with $20 and $30, then you build your way on up. You build your way on up. You build your way on up. You work, you know what I'm saying? You keep putting money in your trading account. Even if you still paper trading, you go on and start funding your trading account every week. You know what I'm saying? You start funding your trading account, but also you be invested in these companies at the same time. It's easy to start investing. You're supposed to be invested anyway before you even paper trade. You got to be invested. Amazon, SPY, basically, you know what I'm saying? It's the best way, or SPYG, which is the same thing. Wait, SPYG, SPYG, which is the same thing. Oh, I forgot that they ain't working right now. SPYG, which is the same as that, but it's cheaper. SPYG. The shares are cheaper. You can get a share of the same thing. SPYG is basically the same thing as SPY. It's still the S&P 500. It's just cheaper. and you can start building your investment portfolio up, $80. But then at the same time, start buying the companies individually on the side. Why you build up with SPYG? See me, this is what I do. I use this VOO, which is basically the same thing. A Vanguard ETF. This is what I use as my savings account. That's a good thing too. You can use SPYG, VOO. You can use these ETFs. Basically, what they are, ETFs are funded trust accounts. Basically, they're like 401k plans, but you run your own portfolio. It's basically a portfolio, 500 of the top companies in America. Start off, while you building your portfolio, while you learning day trading, if that's what you want to do, while you learning these options, you could be investing into the brokerage account. You should be investing into the brokerage account and starting off with a savings account. You know what I'm saying? Savings within this brokerage account. SPYG, VOO, what I was just showing. And that's how, until you learn how to do this, you getting your trading account, the brokerage account, you funding the whole overall brokerage account, getting it ready for you and get ready to go live. You go live, you might have 2,000-3,000 already in your brokerage account, but you still starting small with $20 here because you're still in learning mode. Then you build yourself up. You know what I'm saying? Some people learn faster than others. You build yourself up. Then next thing you know, you're not trading these 65-cent movers no more. You trading the ones that's $350. You trading the ones that's $530 for one contract. You get 10 to 20 contracts at a time. You got to do it like that. Build your way up. But you got the mindset of the 8%, 10% gain. And don't look at the dollar amount, because once you start trading big, 8-10% is a lot. $5,000, a 10% gain on 5,000, that's 500. Yeah, 10% gain on 10,000 is 1,000, or 8% gain, or 5% gain. Yeah, that's how it works. I don't never look at the dollar amount, because when you start small like this and you start looking at the dollar amount, well, 5% gain on $55 is really nothing. But a 5% gain or 10% gain is a great trade. Once you understand that, then you'll get it. That's why I never really say dollar amount. I always talk in percentages, because I don't want to talk in dollar amount. I want to talk in percentages, because a 10% trade is a great trade. An 8% trade is a great trade. Well, hell, a 3% trade can be a great trade depending on how much you trade. If you trading 30, 40,000, 100,000, like a lot of these big timers, they trade 50, 100 million. Look at like at the volume. You know what I'm saying? Big boys. Let me see right here. On this, 220,000. Trading big volume. Big boys. You know what I'm saying? 3% ain't nothing. You know what I'm saying? They take 200,000 and get a 3% gain. That's a hell of a profit off of 200,000 or 500,000. That's how they trade. Big boy trades. That's why you always look at it in percentages. Never dollar amount. A dollar amount will mess you up. So it's almost, let me see. Okay, it's about to be 3 o'clock. That went by pretty fast. See, when you love doing something, time goes by real fast. So everybody that's been watching, appreciate you. It's almost, we got 1 minute left. Had a good time today. Y'all got to see me go live all day long on the stock market because of what's going on today. I did 3 Trades, right. Yeah, I did 3 trades, a 30% win, 7% win, and a 5% win. The 5% win was this morning, and the 30% win and the 7% win was afternoon with the news of Jerome Powell cutting interest rates, which is great news. He cutting interest rates. That's great news. So hope y'all enjoyed the live. If you're watching the replay, I hope you learned something more than anything. You know what I'm saying? So with that being said, I'll be right back here again at 8:30 a.m. in the morning. You know, I like doing this, and I'm also doing this for me because I can go back and I can watch and learn from my mistakes. You know, that's one of the reasons why I'm doing this is because I can go back and watch my trades, my entries and exits, and on YouTube. I can go back and watch the video, and I can learn from it. You know what I'm saying? I can become a better trader at it, as well as showing other people the value of the stock market that they would not teach you in school. So with that being said, it's the Stock Sniper. Like, share, and subscribe. Till in the morning at 8:30 a.m. It's the Stock Sniper. I'm out.